top the agenda. We are live in Hiroshima. Plus, EasyJet says it's benefiting from higher ticket prices heading into the peak summer season. Meanwhile, Burberry's earnings beat estimates as shoppers in China spend again.
Tom, let's look at the futures for the moment. The DAX futures gaining 0.5%. And if you look at the FTSE, they're also gaining by similar gains. I mean, there's really hope that actually in Washington, there's a narrow group of negotiators that will break through and get a deal on the deficit. Yeah, the number has been shrunk to about 5 individuals on both sides working through this issue. The dial arguably be moved in the right direction then. They still haven't got the deal, of course, but there is a little bit of positive mood music emanating from DC, and that lifted certainly the stocks yesterday in the US. You had a decent rally of plus 1% for the S&P, the NASDAQ also ending the session in the green. So the handoff was positive from the US. The stock story, the equity story at the moment really is all about Japan, and we'll zero in on that shortly. But currently in the FTSE 100, adding to the optimism with gains of 0.4%. We continue to work through the earnings picture as well. BT with some job slashing going on there. Bad news, of course, for the workers of BT. Arguably good news for investors in that stock. The FTSE 100 currently up 32 points. The Spanish IBEX getting 0.4%, and over in France, the CAC 40 up 0.6%. Across assets then, let's switch the board and just briefly touch in on what has happened in terms of Japan. Further gains there at a 33-year high. The Nikkei up 1.6% in the session. The yen is weaker, exports are stronger, adding to the optimism. And 7 straight weeks now of foreign inflows into Japanese equities. Futures in the US pointing flat, range bound, maybe a little bit of profit taking coming through after the gains of yesterday. The 2-year at 416, 7 basis point move higher yesterday at the front end in terms of yields. Currently 416, so comfortably above that 4% level. Gold back below 2,000 as the risks around the debt ceiling seems to come off at least a little bit. 1,976 on gold, just down 0.3%, Fran. Tom, let's dig a little deeper into the sectors. I should have worn my green shoes instead of my red shoes because I'm seeing quite a lot of green out there on the market. So 20 groups that make up the stock 600 here in Europe, and actually there's only one on the way down, that's utilities, and it's in the red but pretty much flat. Now the gains are not huge. I'm seeing auto parts, the biggest gainer, technology, both gaining some 0.7%, travel and leisure, but again, a little bit of optimism. So we did have Burberry sales that came in better than expected, but in general, it's just a bit of optimism that we get through the US debt ceiling, Tom.
Okay, and talking of the debt ceiling, President Biden has expressed confidence that negotiators, as we mentioned, will reach an agreement to avoid what, of course, has been described as a potential catastrophic default. We heard from the US president yesterday.
I'm confident that we'll get the agreement on the budget, that America will not default. And every leader in the room understands the consequences if we fail to pay our bills. And it would be catastrophic for the American economy.
Okay, let's bring in Bloomberg's Derek Wallbank now in Singapore, who follows this for us very closely indeed. Derek, what more is needed then to get an agreement? McCarthy saying that it could be done by the end of this week.
Yeah, well, I think by the end of this week is a little bit optimistic potentially because Joe Biden's on a plane to Japan right now. They have said that the president will be able to talk with members of Congress, and the president has deputized some quite serious bipartisan negotiators to be able to fill in the terms. They sort of know where the framework of this deal might actually materialize. I mean, if I were looking at it, I would sit there and suggest to you that some future limitations on spending, some maybe budget caps would be one area. Rescinding some unspent funds, particularly COVID funds, would be another one. I think there's a possibility of something on the line of regulatory reform in terms of permitting, maybe some other things. The big hitch right now is over work requirements and other such restrictions on entitlement programs and the U.S. safety net. And I think that is the real key. There's a lot of things that are Democratic red lines there. Democrats don't want any work requirements on some of these, and if you got them, even though they're big Republican priorities, it actually might make it difficult for Democrats to be able to sign on to the final passage, which would be its own problem of complication. Essentially, even though there's a possibility of a deal in sight, right, you have to be careful that you don't win by too much, because if you win by too much, it's going to be hard for the other guys to vote for what you signed up for.
Yeah, so Derek, so this is kind of my, what if we're lulled in a false sense of security that everyone's cautiously optimistic? If you listen to what Mr. McCarthy was saying, I mean, Mr. President, stop hiding, stop traveling. Is this just rhetoric, or, is there optimism, and then in 2 days could we see nothing and fall flat on our feet, on our face even?
Well, I think, I mean, look, I think we can fall on our feet, we can fall on our face, we can fall on a whole bunch of other places. A lot of it's in play. Right, a lot of it's in play, but like one of the questions I've been asked time and again is what's going to be taken, and I've said a long time you got to get to more pain before you get to progress, and we've actually seen with the White House having to cut short its Pacific trip that Joe Biden is on, scrapping a trip to Papua New Guinea, scrapping a trip to Australia and the Quad, inviting questions about the U.S. seriousness in the Pacific. That counts as actual, honest-to-goodness pain and suffering that will I guess, crystallize the need to get something done here. So that's very, very possible. I also, as I say, I would not overlook the idea that even if a deal is signed, it still has to get passed. Now, I'm optimistic that something will get done at some point. There are plenty of off-ramps here to diffuse a crisis, but you have to be willing to take them, and you have to figure out a way to do this in a way that's going to allow everybody to come around and support it when the vote actually happens in Congress.
All right, thank you so much, Derek Wellbank in Singapore. The president heard us. He's also just arrived, of course, at his next destination in Japan. I think we're looking at live pictures. He did yesterday express confidence that negotiators would reach an agreement, but actually this is not a G7 that's plain sailing, because, of course, some of the Republicans have said, well, the president, in the midst of these very, very important negotiations, should not be in Japan at the G7. That's touchdown, actually, in Hiroshima as Air Force One just landed. I think we're going to probably see the president come out of the plane soon. It's rather exciting always.
Yeah, and as you say, cutting short the trip then to Sunday, the president has said he doesn't think there's going to be a deal until he's back on the ground in DC. So missing out on a planned trip to Australia, and as Derek was saying, Papua New Guinea as well, really important in terms of the geopolitics, particularly with China's reach out to PNG in the last few years. So we await the president to step down off the steps, of course, of Air Force One in Hiroshima ahead of this G7 leaders meeting. We know, of course, China will be central to the discussions there, as will Russia and Ukraine. Also, on the UK front, interesting that the Prime Minister, Rishi Sunak, is set to announce a deal with Japan around semiconductors and chips. But this is the US president waiting for Joe Biden, of course, Air Force One. We wait for those red steps to be put down the side of that aircraft and to be welcomed, of course, by his counterparts in Japan. We will get more analysis, of course, across this story throughout the hour.
Now, joining us to talk about the markets and to talk about the debt ceiling, Sharon Bell, Goldman Sachs International Senior Equity Strategist and co-head of EMEA Global Investment Research. Sharon, thank you for joining us. Given there's cautious optimism that actually both parties will reach a deal in the U.S., where do you park that wall of worry?
Sorry, what was the question there? Where do we park?
The wall of worry. What do you do with the debt ceiling? Do you have to, plan for it, or do you ignore it for the moment?
It's so tricky, isn't it? Because markets have largely, I would say, been ignoring it, more the equity market ignoring it than the bond market. The equity market obviously fell very, very sharply in 2011 when they didn't raise the debt ceiling initially, and there was an impact on growth, and there was an impact on confidence as well, which was quite dramatic. I think at the moment the equity market is priced for the hopeful outcome that they do pass the debt ceiling increase. And I think that within the equity market, that you do see people steering a little bit more towards quality companies, defensive companies, maybe growth companies as well, rather than value companies and cyclical companies that I guess will be most hit.
Would you follow that positioning, Sharon?
Yeah, generally I would in the near term. I think that it is a fragile situation, but it's not just the debt ceiling, which is the issue here. Growth itself is quite weak at the moment, likely to be weak in the second quarter and the third quarter. Equity markets look relatively expensive, particularly versus other assets like what you can get on money market funds at the moment, 4 or 5%. So to us, equities look quite fragile on a number of dimensions, including this one concerning the debt ceiling. So I would be slightly more steered towards quality, yes.
So, Sharon, is this equities in the U.S. that you're more concerned about, or is it worldwide because implications could be big on the debt ceiling?
I think we worry more about equities in the US. Again, the debt ceiling is a little part of that, but I think it's not the main issue for us on US equities. The main one is valuation. We don't have a lot of earnings growth this year. It's likely to be close to zero earnings growth. And yet the equity market in the US trades on 18 to 19 times PE, which is the top of its 20-year range, or toward the top. So you have quite an expensive market. You have a lot of risks, including the debt ceiling one. You have relatively low economic growth at the moment. And that means that we just don't see a lot of value there in US equities. We think returns will be low. And in fact, our S&P target for the end of this year is 4,000, and we're already above that level. Elsewhere in the world, of course, the US equity market dictates global markets to some extent, but you can make good returns elsewhere. Your program was mentioning Japan. That's been a strong market. We generally like non-US equity markets. And for Japan in particular, you've got an improvement in return on equity coming through. That's helping earnings. And that's sort of big fundamental case for buying Japan.
Would more evidence in terms of weaker data, more compelling evidence that maybe the Fed is weighing up a cut by the end of this year, would that draw you back to US markets? JP Morgan's private bank telling us yesterday they actually expect 2 cuts to come through from the Fed by the end of this year, saying that markets are right in terms of broadly the pricing on that. Do you push back on that?
We would push back on that, yes. For us, we don't expect a recession in the US. We just think growth is going to be pretty weak in the next couple of quarters and close to zero. But we are not looking for a deep recession. We are not looking for GDP to fall over the next couple of quarters. And we think the market is a bit premature in expecting rate cuts this year. We do expect rate cuts eventually. We do think the Fed has peaked in terms of interest rates, but it will pause and plateau from here for the rest of this year and not cut until we get into 2024. And the reason for that is we don't have a steep downturn, we don't have a recession, and we still think the labour market is very tight.
Sharon, we're looking at live pictures of Air Force One. We're expecting the President, Joe Biden, to actually step off Air Force One. This is a very familiar scene to those who cover the President and cover, of course, the White House. Now, a lot of these G7 leaders will have a couple of messages that they need to send back home, and, of course, to some of their key allies in the region. There's something for the Global South, maybe, that we'll hear. I know that they'll look at loopholes of sanctions on Russia, a message to China. They'll talk about nuclear weapons and then AI. Sharon, how difficult is it to have a constructive bet on some of the Asian equities, given, I guess, the cold shower that we're seeing between not only US and China, but it's unclear what role Europe plays in this. They're trying to get more aligned with the US, but also need those economic ties with China.
Yes, I mean, Germany in particular. So Germany in this last year has had 2 big threats, really. Higher energy prices because of the sanctions against Russia, but also the fact that its big export market, China, originally was in lockdown for a lot of that period, but also there is a lot of geopolitical tensions at the moment, concerns about China, relations there are very frayed, particularly with the US, and that's potentially restricting Germany's growth and exports to China too. So I do think Europe is very much caught in this. Europe is one of the markets we find is most sensitive to global trade. Because it sits in the way in the huge global trade patterns and is very vulnerable to that, no doubt.
Okay, the sensitivity of Europe to a global trade, and we'll get some lines, no doubt, from these G7 leaders on global trade over the next few days. Sharon Bell's going to stay with us over the next couple of minutes. We'll get more of Sharon's calls just in the next few minutes after the break. Goldman Sachs, of course, International Senior Equity Strategist, go-ahead of EMEA Global Investment Research, staying with us. Still seeing those live pictures, of course, of Air Force One that has touched down in Hiroshima ahead of that G7 leaders meeting. President Biden, of course, expected in that doorway and to walk down the steps any minute. We'll get across that, of course, and keep across that story for you. Across these movers, then, let's touch in one of the big stories of the day, certainly here in the UK. It is BT Group announcing massive job cuts, about 40% of its workforce. You can see the stock taking a hit there, down currently a little over 8%. The earnings as well coming through for BT. On the jobs front, they're going to be cutting staff levels from about 130,000 to between 75 to 90,000 by 2028 to 2030, saying that they're going to have a much smaller workforce. The CEO of this business has been targeting savings about £3 billion a year. Earnings, by the way, it was actually a beat in terms of the earnings estimates, coming in at just over £2 billion in the fourth quarter. but it is those incredible job cuts coming through for BT that are in focus really for investors. The stock currently down a little over 8%. Aston Martin, wow, soaring. Geely upping its stake. Geely is now the third largest shareholder in this luxury sports car maker based here in the UK. Of course, they've gone from fifth largest shareholder to third. They now own 17% of that business. A big boost there coming through in terms of the money from China. Burberry down 5% on the earnings picture. They did see sales up 7%, China coming back, but investors not overly convinced at this point. Coming up, EasyJet says it's benefiting from higher fares as summer travel demand picks up. We're going to bring you more from our conversation with the CEO of that business. That is next. This is Bloomberg.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
It is a strong demand environment as well, and just over the winter we had 41 more customers traveling with us than last winter as well, and this is something that comes from two things really. One is that people have really looked upon travel now, very differently than they did prior to the pandemic. This sits now firmly as the top priority when people choose on how they're going to allocate their discretionary spending, and that is something that is coming through in the numbers as well. So we are ahead of last year now in terms of the booking from a load factor point of view, both in Q3 and Q4, and we're looking forward to that to continue.
Okay, so despite the loss, you're presenting a very positive picture about consumers willing to spend on travel. The outlook's looking positive, returning to growth later this year. Will you be placing a large order for new aircraft like some of your rivals have done, like Ryanair and Wizz Air?
Well, I should just remind you, first of all, as you know, that we already have an aircraft order of 163 aircraft. So that's the current order that we have that we will exercise, and that will take us out to 2028. And that is a combination of both replacement of the existing fleet that we have, but also then growth as well. But already, if you're looking at the growth numbers, we are growing our network, and excluding some of the changes we've done to some of the underperforming bases we have, in the UK, as an example, we have 1 more million seats this summer than we had last summer, as an example as well. So, we will continue to grow. And already for next year, we're looking at 10% growth. And we have the fleet in order to support that.
So, yeah, you say you're increasing capacity. You have more aircraft coming in. We've discussed about how some of your major rivals do as well. You believe in the UK. You've got an extra million seats flying from the UK this summer, you mentioned. Are you worried about excess capacity coming into the system? And what's that going to do for yields?
Well, it's an interesting question. I think because of the OEMs, or both Airbus and Boeing have, documented, challenges in terms of delivering on their orders, we think we're in a good position on that. We're one of the largest customers of the Airbus A320 family, as an example. So we believe that, we're going to be able to mitigate any challenges that might be coming. But I think in general, you're going to see that the supply from a manufacturer's point of view will be relatively tight here from the next 3-4 years. So of course, that would have a positive impact on the yield environment, as long as we see that the demand that has been strong continues to be strong.
Okay, that, of course, was EasyJet CEO Johan Lundgren speaking to Bloomberg on the back of its results this morning. Let's stay on the UK then and bring Sharon Bell back in, Goldman Sachs International Senior Equity Strategist and co-head of EMEA Global Investment Research. Sharon, thank you for your patience and for sitting by there. On the UK, the FTSE 100, the FTSE 250, underperforming year to date. Is this a question of sterling strength or the mix that we're seeing in UK equities? And do you expect that to continue, or is there a turnaround story coming for UK stocks?
So I think sterling strength perhaps hasn't helped here, but I think the main thing is the mix of what the UK is exposed to. It doesn't have tech companies, very, very few, particularly in the FTSE 100, and has a lot of energy stocks in the FTSE 100. And of course, energy prices have fallen. It's been quite weak so far year to date. Mining companies as well have been hit by weaker industrial metal prices as well. So if I think about the commodity complex, which the FTSE 100 is very exposed to, you've seen weak prices there. And then on the FTSE 250, I would have actually expected the FTSE 250 to benefit a little bit from the strength of sterling. The strength of sterling is indicative of better economic data in the UK, better than was expected, and a higher sterling should actually benefit FTSE 250, but it hasn't that much.
Sharon, I know you can't talk specific stocks, but BT, that stock is ugly today. It's cutting 42% of its workforce by 2030 because of the rollout in fiber. Is there, do you like telecoms in general, because we're going to see more consolidation and possible M&A?
Yeah, we reasonably like telecoms. I think it fits in with a sort of characteristic where we're looking for more defensive areas, let's say, in a market where we're expecting very little returns over this next 6 months, a year. BT also offers a reasonable dividend yield as well, and so does telecoms more broadly. So it's the dividend yield, it's the defensiveness of the sector, and you're absolutely right. We're seeing a little bit more consolidation in the industry, which should mean a bit more pricing power as well. So there's lots of things that make the telecoms industry a little bit more attractive. I think the concern for telecoms, it's one of the most indebted sectors in the market, and of course, borrowing costs and yields have gone up as well. So there's that little bit to sort of weigh against some of the more positive things.
Sharon, thank you so much, as always, for giving us a little bit of your busy schedule. Goldman Sachs International Senior Equity Strategist and co-head of EMEA Global Investment Research. Now, coming up later today, Guy Hans, chairman and founder at Terra Firma Capital Partners, joins us to discuss the future of the UK economy. Stay with us for that, and this is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware. And that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability. And we have differences. We're capitalists; they're not. And it's okay. We could sort it out. But we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to the Open. 25 minutes, almost 26 minutes into your European trading day this Thursday. Modest optimism across European equities. The handoff from the US was strong, of course, the gains coming through on the back of a little bit of optimism. The mood music changing in terms of those debt default risks. President Biden, he's touched down just outside of Hiroshima for that G7 meeting. He'll be back in the US on Sunday. Futures in the US, S&P E-minis are flat. Of course, you saw some solid gains yesterday, more than 1%. Again, across the benchmark here in Europe, 0.4% of the gains coming through. The FTSE 100 trading at 7,764. That's a gain of 40 points. Autos topping your sectors. Talking of the sectors, let's break it down, have a look at some of the individual stories in the mix. Burberry coming through from some earnings. The sales were up 7%. There's some solid growth coming through in terms of the demand for China, but it's the forward outlook that maybe is weighing on that stock. Currently down 5%. BT Group slashing jobs. That's the plan, by up to 40%, but it's the disappointment around cash flow coming through, the guidance there that's weighing on that stock. Aston Martin rallying, Geely moving from 5th largest shareholder to 3rd. Coming up, we're going to get more on the G7 summit. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open
for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. President Biden expresses confidence a debt agreement will be reached. House Speaker Kevin McCarthy says it's doable by this week. European futures and Asian stocks rise. G7 leaders gather in Japan for a summit where China and Russia's war in Ukraine will top the agenda. We're live in Hiroshima. Plus, EasyJet says it's benefiting from higher ticket prices heading into the peak summer season. Meanwhile, Burberry's earnings beat estimates as shoppers in China spend again. So, Tom, markets definitely open and they're rising.
Yeah, there's been a bit of mixed reaction, of course, to some of the earnings coming through. BT dropping, Burberry under pressure as well. But broadly across that index, you're absolutely right. Gains of 0.4%. The optimism around the movements on the debt ceiling, lifting and propelling these European equities, of course, as you also touched on the handoff from Europe, or at least Asia, and the US solid as well. The US ending the session up a little over 1%. The DAX is gaining 168 points. The FTSE 100 up 0.5%. Aston Martin, a real lift there. Let's switch it over and see how things are playing out across these sectors. The last time I looked, it was autos streaming ahead because, of course, Aston Martin has had a massive injection of cash then coming through from Geely in terms of its shareholding, moving from 5th to 3rd largest place, the Chinese shareholder in Aston Martin. So a boost there in terms of the liquidity for that luxury sports car maker, which, by the way, year to date, prior to today, was gaining about 50%. So that as a sector, autos and parts gaining 1.4%. Tech also gaining 0.9%. You saw yields moving up a little bit at the front end. Normally, that's a bit of a drag on tech, but in the session today, there's some optimism. And at the bottom of the list, one of the safe haven tilts, utilities, currently down 0.4%. There's telecoms down a little under 0.2%, dragged lower by what is happening with BT. Again, that stock, the last time I had a look, was down about 8% on concerns about open reach customers and cash flow. Francine.
Now, U.S. President Joe Biden, Tom, has arrived in Japan ahead of the G7 summit on Friday. His Asia trip has been cut short, of course, as a catastrophic default on the country's debt looms, or at least negotiations are continuing. Let's bring in Bloomberg, Stephen Engel, who's in Hiroshima waiting for the president. Stephen, this was a very clear, I guess, G7, where we thought that President Biden would come to Asia and also try and reassure allies that he stood behind them. But the summit so far hasn't really done that.
Yeah, I think he's still going to reassure the allies. Of course, the G7 in much more unison than the G20, which couldn't agree on phraseology in the last meeting, of course, in India on Russia. The G7, as far as I could definitely tell at the finance minister and central bank governors meeting that was held in Niigata, Japan last week, is that there's a clear consensus on phraseology on the illegal, quote unquote, war that Russia is waging in Ukraine. So Jake Sullivan, the U.S. National Security advisors, talked about, the U.S. maybe proposing more sanctions and also economic and humanitarian aid for Ukraine here at the G7. So there is some common ground that even though a truncated trip to Asia could undermine his push to G7 and other invited dignitaries like those leaders from Brazil, Indonesia, India, Vietnam, South Korea, and others could, take a back seat a little bit if he's not going to be spending as much time, including he's canceling his trip to Papua New Guinea, which is a strategic place in the Pacific Ocean that Xi Jinping met with the Prime Minister in November of Papua New Guinea. Also, the then Foreign Minister Wang Yi went to Port Moresby. So Biden is going to miss that opportunity to shore up and pledge some support to Papua New Guinea. He's also going to skip the Quad meeting in Sydney in Australia. So he's cutting it short, but he's going to try to get as much done in a unified G7 as possible. But again, the debt ceiling impasse is going to undermine him a little bit.
Yeah, indeed, Stephen. Of course, you're spot on to touch on PNG, Papua New Guinea, given the geopolitics, not to be overlooked. The fact that, of course, there's been this massive outreach from China. There's also outreach around semiconductors. Japan, of course, in terms of support, ideally, or at least it seems coming through for Micron. And then the UK as well, apparently going to be announcing a deal with Japan on semiconductors. How kind of significant are these moves around chips?
I think it's very significant because it falls into place what Janet Yellen and others have talked about, and that is friendshoring, securing up the global supply chains, in particular in these chips. Look at Warren Buffett and Berkshire Hathaway. While on the one hand, he's now recently talking up investment in Japan, he's also completely disinvested Berkshire Hathaway's investment in Taiwan Semiconductor. Not because he doesn't like TSMC, he doesn't like where it's located, Taiwan. Geopolitics adds that risk. So I think G7 is trying to de-risk that proposition of Taiwan and its critical role in advanced semiconductors and start getting G7 members like Japan to incentivize companies to move here. They've done that, $1.5 billion US investment or donation, if you will, to Micron Technologies of Idaho for memory chips, advanced semiconductors to be made here in Hiroshima. On top of TSMC is already down in Kyushu building a fab there. So Japan becoming a critical cog in the diversification of supply chains for like-minded economies. Again, de-risking that Taiwan equation and then incentivizing companies to move here. Rishi Sunak, you mentioned the UK. He's just announced this Hiroshima Accord to get Japanese investment into the UK, also in semiconductors. So yeah, the wheels are moving on this.
Yeah, it's a really fascinating and, of course, consequential trend. Excellent. Thank you. Stephen Engel on the ground for us in Hiroshima, covering all things G7 over the next few days. Right, coming up, Burberry shares slump after a slowdown in the Americas overshadowed a rebound in China. We discuss that next. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because this is really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
People ask ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
It is Thursday. Welcome back to the Open. 39 minutes into the European trading day, and you're seeing gains of 0.4%. That's being held across the European benchmark. Futures now edging higher as well in the US. A little bit of optimism around the progress that's being made on those debt ceiling talks across your sectors. Autos at the top of the list, certainly getting a lift from the investment of the China's Geely into Aston Martin here in the UK. At the bottom of the list, basic resources down 0.5%. Now, a scoop for Bloomberg around semiconductors. Sources telling Bloomberg that chipmaker Micron is poised to get about $1.5 billion in terms of incentives from the Japanese government to help it produce next-generation memory chips in the country. Meanwhile, British Prime Minister Rishi Sunak has announced a semiconductors partnership with Japan during his visit to Tokyo. Let's get the details then and bring in Bloomberg's Tokyo tech reporter, MJ Lee. MJ, tell us about the Micron deal there and how significant it is in terms of the build-out of semiconductor manufacturing capacity in Japan.
It is definitely a huge deal. Like you said, $3.6 billion of money. They're planning to use this to upgrade their Hiroshima chip factory, and Japanese government officials have promised to provide incentives to help Micron do this, according to sources. And even beside Micron, we're hearing a lot of local media reports and buzz surrounding new R&D facilities from other companies. These companies include like Intel, Samsung, and Belgium's IMEC. So all of these companies are expected to be building R&D facilities in Japan, all of which will help Japan kind of boost and advance its chip tech expertise.
So, MJ, what's in this deal for Japan?
Right. So Japan, as you can see, Japan is really trying to step up its efforts to boost and advance its semiconductor technology, especially in what you call nanometer technology. So all of these billions of dollars of investments in new top R&D talent flowing into Japan are expected to kind of feed into those efforts and kind of help Japan materialize it. This is important for Japan because of the aging society and, of course, all the uncertainty surrounding the chip global supply chain. But of course, we'll have to see going forward how all these plans really pan out.
Thank you so much. Our Bloomberg Tokyo tech reporter, MJ Lee. Now, Burberry shares lower this morning after a slowdown in the Americas overshadowed a rebound in China. And this follows a mixed picture for luxury rivals in the first quarter of this year. Now, for more on all of this, let's bring in Bloomberg's luxury analyst, Deborah Aitken. Deborah, thank you so much for joining us. I mean, this is on the back of a new chief executive at Burberry that started about a year ago. He brought in Daniel Lee as his chief creative designer. Is there a problem with the product, or is it just geography?
Product from Daniel Lee. So we've seen the first collections come through, new capsules, all been very well afforded and very good feedback. But the problem with Burberry is that we won't see his product fully in stores in sizable quantity until later, very much later in the year. So it's not the product, because they're doing lots on what was already there from prior creative designer. But when we look at region, anywhere where there's softness on brand in the US, it's showing through. And we've seen that a little bit in the numbers. I think what we need to remind the audience is that Asia for Burberry is going to be about 45% of sales, and together with Europe about 80% of sales, and that the US was against a very high comp. So it looks worse than it is to me. But we still have to be aware of these products which are rebuilt in brand.
Okay, and the stock down currently a little over 6% on the back of those earnings. So pretty decent picture when it comes to China, but a bit of a disappointment on the picture when it comes to the US. Now, thank you very much indeed. Our Bloomberg, of course, luxury analyst Deborah Aitken. Let's switch focus to the telecoms industry then. BT Group shares, well, they are really sinking after the telecom operator said it plans to cut its labour force by as much as 42% by the end of the decade. Let's bring in Bloomberg's tech, media and telecoms reporter Thomas Seal. Tom, why then are BT, and we also had Vodafone earlier in the week, both cutting jobs and to a significant degree?
Yeah, this is somewhat been inevitable in the telecom sector, which has itself been shrinking for years. Revenues have been on a sort of stagnant basis. Profits have not been great. So I actually reported in 2019, BT had been looking at a plan that resembles this one. And I think now that they've set out how they're going to build the fiber network, some of it is not based on immediate cost pressures, but it's based on them not needing the people to build that network. But when you look at it in the context of higher interest rates, when you look at Vodafone doing something similar, it doesn't paint a very rosy picture for the sector.
Thomas, why have their share price gone down anyway, despite the cost-cutting benefits of job cuts? I don't know whether it's a restructuring problem, they don't have confidence in the chief executive, or something deeper, more, structurally concerning.
Yeah, I think it's the outlook for the sector in both cases to some extent. For Vodafone, there's a lack of confidence that you get from analyst notes that they're able to execute what they've said that they're doing. In Vodafone's case, they've talked about the need to strike big deals in some of their biggest markets. They announced that they were going to do a deal with 3 in the UK 7 months ago, and they still haven't done that one. They missed a key deal in Spain. So I think investors have been burned. With BT, their outlook today was quite vague. It was just for growth, and some people have cited that as negative. Cash flow has shrunk. They're facing, they're one of the biggest users of energy as well. So energy costs have really hit telcos, and that pressure hasn't gone away overnight. So it's not a sunny sector, and it hasn't been for years. So this is somewhat a capitulation after years of pressure.
Thank you so much. Bloomberg's Thomas Seal there with the very latest scores on BT. And I have to say, it's quite shocking when you read 42% of jobs will go by 2030. Now, a panel tasked with overseeing the credit default swaps market says the write-down of Credit Suisse's AT1 notes will not trigger an insurance payout. The regulator, which reached a faster-than-expected decision, took the view that the additional Tier 1 securities were junior to the subordinate bonds underlying the swaps. Now, let's get more with Bloomberg's Tom Metcalf. Tom, I love the fact that in the last 2 months, we're all now experts or think we're experts in AT1s. But, I mean, was this, expected, or does this basically change how banks will fund themselves going forward?
I think the surprise here was how quickly they reached this decision. Right. So it's called the Credit Derivatives Decision Committee or something like that, and it
rolls off your tongue.
Exactly. And normally they're looking at they are looking at hundreds of pages. These are very technical discussions, and I think while I reckon most people in the market probably thought they would come to this decision, the fact they've come to it in a matter of days is kind of what maybe has caught the market slightly off guard. It's a fascinating debate. It's one that kind of certainly the litigants are saying, hey, this could have huge implications in the market. What the Swiss are saying, hey, look, this is all clearly in the documentation, and make sure you read those prospectuses. So, not a surprise, but the speed of that was really, really quite impressive.
Tom, in other parts of the banking news, then Deutsche Bank agreeing to pay $75 million to settle a lawsuit linked to victims of Jeffrey Epstein. What are the details on this?
Yeah, so you've got 3 lawsuits, now down to 2 after this sort of settlement. Basically, from an unnamed victim of Epstein, basically saying that Deutsche Bank also benefited from, this sort of sex trafficking, by virtue of basically having Epstein as a client. So big number, $75 million. I think most investors in Deutsche Bank will be very glad this is resolved. It's a huge liability looming. For me, the big question is you've got still 2 outstanding lawsuits against JP Morgan. Now, does this encourage them to settle? Are they going down a different track? We really don't know, but I know our analysts at Bloomberg Intelligence are saying, they expect another settlement from JP Morgan as well.
Okay, Tom Metcalf, thank you very much indeed on the latest in terms of the lines crossing on this banking sector. Now, lines crossing as well when it comes to the chemicals and agri part of the business and the economy. Seed giant Syngenta, which of course is based in Switzerland, but is actually Chinese-owned. It's said to move forward with a Shanghai IPO. This has been something that people have been waiting for in terms of the details on this. It's been delayed for a while. This is a big deal in terms of the listing then of Syngenta in Shanghai. It's a big boost for that market, certainly. Shanghai, by the way, or Syngenta, is owned by China National Chemical Corp, and so we're getting details. The regulators have yet to sign off on this, but the plans are that it is going to be listing indeed on the main board there in Shanghai. So that's a bit of news in terms of agricultural products with Syngenta. Coming up, South Africa's rand hit a record low last week. We're going to delve into why some economists think rate hikes may harm the currency more than help it. We discuss that next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple of people, our average restaurant now does about over $1 million per restaurant in digital sales.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open, everyone. 51 minutes into the European trading day. The focus firmly on the debt ceiling. A lot more optimism than there was 24 hours ago. And then President Biden, of course, in Hiroshima for the G7 leaders, but he's cutting his trip short to go back to Washington for negotiations. Now, let's also take a look at some of the key things that markets are watching out for today. The Bank of England Governor Andrew Bailey and the BOE officials are set to testify to the UK's Treasury Select Committee on QT policies. That's at 10:15 a.m. UK time. 1:30 p.m. still in the UK. We get U.S. jobless claims and other economic data, including existing home sales.
Okay, and this evening at 8 p.m. UK time, the Central Bank of Mexico is going to announce its rate decision. Bloomberg Economics sees the central bank there raising rates the final time in this cycle by 25 basis points, of course, important within the EM mix. And later today, before the US equity markets open, investors will get another gauge of consumer resilience, with Alibaba and Walmart both set to release earnings. Now, back to geopolitics, but also to the travails of one nation on the continent of Africa. South Africa's crippling energy crisis, low growth, and deteriorating fiscal metrics combined to push the rand to a record low last week. It's down a further 0.9% today. The normal response of raising rates to defend the currency could actually undermine a fragile economy and push the rand even lower. That is the view of Goldman Sachs. Let's bring in Bloomberg's Jennifer Dabasaja, who's on the ground for us. Jen, what are we expecting then from the Central Bank of South Africa?
Yeah, Tom, I mean, as you mentioned, economists are really saying that the central bank is really at a difficult time at this point in time because last week, the actions of the rand dropping to the lowest level it ever has seen against the dollar really suggested that maybe we'll see more rate hikes. But as you mentioned, this economy is already going through a lot of struggles at this point in time. You mentioned the energy crisis, you mentioned low growth, and so the central bank really needs to do what it can to not further weaken the rand, and that's going to be a really difficult position for the central bank to make. Next week, we're supposed to hear exactly what this rate decision will be, and what economists are saying is that it's unlikely that the markets will signal any sort of a pause that the central bank will make, and we could potentially see further rate hikes, further deteriorating this economy. And just last week, I wanted to note that what we heard from the central bank governor here in South Africa was maybe just a little bit of a peek of the dilemma that he is potentially facing. He was saying that any hope for a stable currency here is just as much impacted by global factors, and not just that. We mentioned the geopolitical issues that this country is now facing. He said that political leaders making statements fuels to the uncertainty and adds to the volatility, not exactly helping the task at hand for them. So a lot to pay attention to when they make this decision on May 25th.
So, Jen, what is the state of the power crisis in the country?
Yeah, Fran, we heard from the state-owned power company Eskom this morning. They are holding a briefing this morning for the public, and a bit of concern for investors in particular is that the power crisis doesn't seem to be easing up too much more. What we heard from Eskom is that there could potentially be stage 8 power outages, which, just to give you some insight, could potentially mean people are without power for up to 12 hours a day. And that is coming at a time, of course, when the country is dealing with a cold winter. So that's not exactly what people want to hear, because we've already seen the energy crisis make a significant impact to this economy here. But Eskom really this morning trying to signal, trying to tamp down any concerns that this is going to lead to a national blackout, saying that this is a controlled power outage and that there's no concern, but definitely a lot of concern in the business community and with investors about what this could potentially mean for this economy. And of course, as we've seen, foreign direct investment here in this country has stagnated for the most part. And so there's a lot of concern that this continuing deteriorating energy crisis, on top of the geopolitical issues that this country is now sort of caught up in the middle of, is just going to make the outlook for any sort of recovery in this economy pretty bleak.
Yeah, indeed. It doesn't help that ties with the US have been fractured on the back of that story around weapons sales to Russia, has it? Jen Dabasaja, thank you very much indeed on the challenges facing that South African economy. Across your benchmark, by the way, just checking back on these markets here in Europe, gains of 0.5% here in Europe, again, picking up the upside that came through from both the US and Asia. Movement on the debt ceiling lifting to some optimism. Futures, by the way, S&P EMEs just edging higher by about 0.1%. Individual movers on the focus, some really big moves coming through for the likes of Aston Martin and BT Group, slashing jobs at BT Group, and the outlook in terms of cash flows, a disappointment for investors. Aston Martin getting a lift as Chinese investment comes in, with Geely now the 3rd largest shareholder. Plenty more coming up, Fran.
Yep, we speak to Guy Hans. We'll talk about investment and investability in the UK. He's chairman and founder at Terra Firma Capital Markets. This is Bloomberg.
York is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. President Biden expresses confidence a debt agreement will be reached. House Speaker Kevin McCarthy says it's doable by this week. European stocks are higher. G7 leaders gather in Japan for a summit where China and Russia's war in Ukraine will top the agenda. President Biden expected to meet the Japanese Prime Minister over the coming hour. Plus, EasyJet says it's benefiting from higher ticket prices heading into the peak summer season, and the Burberry earnings beat estimates as shoppers in China spend again concerns about the U.S. Now, first thing is first, let's check on the markets. We are seeing optimism across the board. I would say cautious optimism, a little bit like the talks on the debt ceiling in the U.S. European stocks for the moment 0.5% higher. If you look at futures in the U.S., 0.2% higher. Now, what we know is that the president of the United States, Joe Biden, is in Hiroshima. He arrived about an hour ago, but then he will cut short his trip in Asia to go back for talks in Washington. So for the moment, a bit of a sigh of relief, nothing huge in terms of market moves, but certainly the market are betting that we will get through the U.S. debt ceiling without anything too ugly. This is a calmer mood, certainly in stocks that we saw in the last couple of days. The two-year yield 4.162, and then you can see the Nikkei over in Japan, 30,573 points. Now, the story here in Europe is extremely interesting because we have quite a lot of earnings. I would focus definitely on the UK, and actually what we're seeing on the FTSE, 0.5% higher. Now, BT Group getting slammed. They said that they will get rid of about 42% of the workforce by 2030 because of the rollout in fiber. I mean, when you look at that headline figure, 42% of staff being let go, it's really quite something. And the share price is under significant pressure. And then we have Burberry beating in China, but also concerns about some of the strategy maybe in the U.S. And so we're seeing, despite better than expected sales, Burberry shares under pressure. Now, President Biden has landed in Japan for the G7 summit, a trip criticized by Republicans as the debt ceiling negotiations remain deadlocked. Despite the president pushing ahead with his foreign trip, which has been shortened, both sides have said they're confident that the U.S. will not default. Let's get more now. Bloomberg's Derek Walbank in Singapore. So, Derek, what more is actually needed to get an agreement?
Well, Francine, I think that what you're looking at right now is you're looking at the shape of an agreement is kind of coming into fore. You're talking about possible spending cuts in the future, maybe spending caps to try and constrain the growth of future spending. You're talking about maybe pulling back some unspent funds. You're talking about maybe some bipartisan permitting easing, some things that both sides could call a win. but they're really stuck. Negotiators are really stuck on the idea of increasing work requirements on some U.S. social safety net programs. Somewhere in there is a Democratic red line across which a lot of Democratic lawmakers will not cross. And that is going to be a critical consideration as we go through here, because Kevin McCarthy and Joe Biden need to strike a deal. The X date on this, the Treasury tells us, is somewhere around June 1st, on or after June 1st. And so we don't have a ton of time left here. But whatever deal they do strike, it also has to be able to pass in the House and the Senate.
So what is Joe Biden wanting to accomplish at the G7? And actually, the fact that he's cutting his trip short, Derek, does it mean that actually he won't do either very well?
Ooh, well, what a good question. Yeah, I think that there certainly has been some diplomatic damage done from canceling the stops on this trip that were intended to be taken to Papua New Guinea, to Australia for a Quad meeting. They're going to try and shoehorn the Quad meeting in a little bit at the G7. So I think that the White House is going to be looking for something on that. But look, this whole trip, the unstated thing, and sometimes a little bit stated, was that this was going to show the U.S. depth of seriousness in the Pacific, especially contra a rising China, right? You can talk about a whole bunch of things that are on the table there, from trade to Taiwan to China's trying to expand its presence in the South China Sea and the Pacific. All of these things the U.S. wanted to sort of lay down a marker on, wants to boost up Japan, wants to boost up India and Australia as places that can kind of act as regional counterbalances to China. It makes it harder when all of a sudden Beijing can come back with a narrative and say, yeah, but this guy who's come across the sea to say this has cut his trip short so that he can go back and focus on paying his bills. Certainly, I think there's a little bit of a diplomatic difficulty there. I think if the White House can make some movement on this overall issue, though, and if they are able to avert a debt limit thing and say, look, it was a little bit of smoke and fury, but nothing really bad, and it all sort of worked itself out, that'll count as a big win for the White House. But you can't say for sure that either of those things are going to happen yet.
Derek, public service announcement. You play, apparently, pickleball, and this is all the rage, right, with all the celebrities. I have no idea what pickleball is. All I know is that it's some kind of sport with a paddle, and it doesn't involve pickles.
Yeah, that's really true. I can't stand pickles, but I do quite like pickleball. It's sort of... I feel like I have just about the right amount of hair for pickleball. It's sort of badminton or table tennis, but on a full court. It's not terrible. It's not terrible. Come to Singapore, we'll play sometime.
Okay, I mean, I'm not sure about that, but this is where all the majors, even, Eva Longoria, Michael Phelps is playing. So, Derek, we'll have a chat offline, and then maybe push that out on social media. Let's get back to the markets. Let's get back to the U.S. debt ceiling and how markets are reacting to that. Investors watching the U.S. debt limit situation. That's as President Biden expresses confidence that negotiators will reach an agreement to avoid a default. Joining us now is our Bloomberg Markets live editor, Eddie van der Veld. I mean, Eddie, it needs like a U.S. debt default looming to get you back on air. I'm so happy to speak to you.
I know.
I mean, yesterday markets were worried, and today they're kind of like, no, we're fine.
Yeah.
I mean, could it go back? Are we going to be this backwards and forwards? We get a deal, we don't get a deal for the next couple of weeks?
Yeah, absolutely. I mean, it's become such a big deal. It's pushed the banking crisis off the agenda, right? Markets seem to be only able to focus on one crisis at a time at the moment, and I think what we would like to know on Markets Live is just how do markets price if we get the almost inevitable deal, right? Yeah. If we get that deal, does that mean that the Fed becomes more confident in growth? Does it mean that they keep rates higher for longer? Yeah. And is that bullish for the dollar? Which then is not necessarily a big risk on trade across markets.
Yeah, I mean, I've been trying to figure out, no one really can give me an answer to this, which is why I'm so happy you're here. What if we don't get a deal? I mean, is that now taken off the table, or this is like seniors not getting paid, this is contracts, we don't know what happens to treasuries?
Yeah, look, I think if we don't get a deal, the fallout will be substantial and immediate, right? I think if we don't get a deal, you do see pension funds in trouble, you do see banks in even more trouble than they are right now, right? And I think, therefore, what do you see? People go to safety. Where is safety? Safety's in the dollar. Safety's in treasuries. So we might perversely see people going back into treasuries as a result of no deal, as the result of a default, and that therefore you see things like gold in the initial aftermath falling really hard just because there is this rush to liquidity.
But because of all of these uncertainties, I mean, longer term, are we going to see really more of a threat to dollar as a reserve currency?
Oh, I think absolutely, and I think the fallout, the immediate fallout, is very different from the fallout 2, 3, 4 months down the road. I think immediately, yes, there is an absolute flight to quality. Beyond that, though, you do see the sort of view that we've seen evolve since 2008, where the Fed aggressively cuts rates, to compensate for the fallout across markets, and that then you see hard assets like gold rallying again.
I'm just pummeling you. I mean, cuts or no cuts from the Fed? This is like the big debate.
Yeah.
Right? And I know where I stand. Or, a lot of banks are basically going to what the markets is thinking. We're not sure about it. Where do you stand?
Whether we get a deal or not?
No, like on the Fed cuts at the end of the year.
On the Fed cuts. You know what? I don't think we see cuts by the end of the year. I think the Fed will, unless things change substantially, even if we see some sort of small uptick in inflation, I think the Fed knows that there is a substantial lag on its policy.
Yeah.
And will probably therefore stand pat for a little bit and see what the effects of that is going into next year. We would have to see a substantial slowdown. And the consumer at the moment is strong, isn't it?
Right. So there could, I mean, if there's a credit crunch, does it all just depend on the credit crunch? So it's the consumer. If they turn, then there's a chance. But I don't understand then why the markets are really pricing in these cuts.
As long as we don't see a complete banking collapse, right? I think the Fed, for the moment, stands pat. I think the only thing that really made Powell sound almost a little bit dovish in the last few months was when we were in the acute phase of the banking crisis, where we saw, active bank failures. Unless we go back to a return of that, which, don't forget, if we get a treasury default, then we could have that.
But Eddie, help me out. Why is the market so convinced we get cuts? Markets are rarely wrong, certainly rarely this wrong.
Yeah, the markets, I think the market, well, the market looks to be fighting the Fed a little bit. I think the market is worried about recession, and there are signs that credit conditions are tightening. What we're not seeing is the consumer falling over, and I think the market is far more focused at the moment on credit conditions than it is on the consumer, and I think that's a mistake.
Okay, Eddie, thank you so much. So good of you to join us between like pickleboarding or whatever. No, I'm kidding. Bloomberg Markets live editor Eddie van der Veld, firmly on dollar watch. Coming up, low-cost carrier EasyJet sees a summer boost as travel demand takes off. We'll bring you more from a conversation with the chief executive Johan Lundgren next. This is Bloomberg.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
think that actually people's views on travel have changed. This is now more a priority versus house renovations or going out for dinners or doing other things with the discretionary spend that you have. And I think that now 45% of UK consumers say they were more likely to book with a low-cost airline. That means that people gravitate towards value, which is exactly what you've seen in other times when there have been, you know, challenges on households.
Well, EasyJet Chief Executive Officer Jan Lundgren, they're speaking to Mark and Anna on the back of results this morning. Now, Burberry shares lower this morning after a slowdown in the Americas overshadowed a rebound in China. Now, this follows a mixed picture for luxury rivals in the first quarter of this year. Deborah Aitken, our Bloomberg Intelligence luxury analyst, joins us. Deborah, thank you so much. I mean, every time I have a luxury question, I turn to you to try and make sense of it. Burberry, for me, is a little bit of a mystery because they did well in China. Actually, the U.S. didn't do so well. Is it a problem with product? I mean, they have a new creative director, the chief executive, the new one has only been in charge for a year, or is it the way they sell things?
I think that product, first off, is just that there's a bit of uncertainty on the transition to a fuller collection from Daniel Lee, which comes by year end. The stock has had a good run into results. It's guided as it expected for the year ahead. So there's nothing big and new for the year ahead, but it did beat. And you can see that the CEO, Jonathan Ackroyd, who's been there for a year, is doing lots in terms of tweaks in the business, new levels of management in there. So it's really about the standalone product. It's about how Burberry stands on its Britishness through this year and how they manage that with a bit of a weaker market at aspirational level.
So what's selling right now? I mean, I still find it, you know, LVMH, now the most valuable company in the world. They do luxury products. So first of all, they really smashed a lot of their rivals. But also it's amazing with all of the AI products and what we need, that it's luxury that seems to be leading the leaderboard overall.
And it's luxury in Burberry as well. If we go to their higher price points, then for leather goods and for outerwear, trench coats and others, they're doing very, very well. But it's the entry level that's a bit softer in the US. Okay. But the other side of it is that China exposure. If we think about LVMH, they have so many brands to that they sit aside. Whereas for Burberry, it's that single brand phenomenon. So it's about how much pressure is there just over the next few months with everything already open for the investor to see.
So Deborah, what are you expecting actually from luxury overall in 2024? And we talk about luxury, but also there is a little bit of softness, I think, in watches of Switzerland yesterday, where they were very strong. So I don't know whether we're expecting too much in some of these brands and whether, you know, it's solid trend growth or whether we're going to see bumps.
We look generally for about 7 to 8% for the year 2024 on top line. The big issue for 2024 is going to be EPS, because when we think most of these companies, the biggest in the index and the highest weighted are EU-based, so they've had benefit from Forex tailwind this year. Into 2020, end of 2023 and into 2024, that abates, so you're probably going to see EPS matching sales growth. And given that there is this mounting pressure, we have to say, on softness in the US, and who knows what happens in the month ahead in parts of Europe too. We can see second-hand watch markets and others starting to be flooded a little bit linked to crypto. Some are just hesitant on some brands more than others.
So, Deborah, and we've seen and we've heard actually about some price increases, like 30% at some of the really high-end top luxury. At some point, does it hurt demand, or is this just pure margin play?
It's certainly brand by brand, and even within that, product by product or collaboration linked. But I think for this year, we more look at 3 to 4% growth from pricing. Most are saying that low to light mid-single digit pricing, just aligned to cost, because the biggest cost for them, given they have such a long purchase of their hard and soft leather type goods or jewelry type products, it's about wages costs and really artisan training, and that's where the cost lies.
Deborah, thank you so much. An expert in her field, Deborah Aitken there, luxury analyst at Bloomberg Intelligence. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. BT Group says it plans to cut its labour force by as much as 42% by the end of the decade. The job cuts, which include contractors, come after the UK's biggest network operator completes its nationwide fibre optic rollout. BT says staff numbers will fall from about 130,000 to between 75 and 90,000 by 2030. Now, President Joe Biden has expressed confidence that negotiations will reach an agreement to avoid a U.S. default. Biden and congressional leaders have agreed to a narrower round of staff-level talks with hopes of reaching a deal. The U.S. president has shortened his trip to the G7 in Japan to continue negotiations in Washington next week. Bloomberg has learned that Meta Platforms is to be handed a record privacy fine by the EU, eclipsing the near €750 million penalty imposed on Amazon. Ireland's Data Protection Commission, which oversees the EU's operations of most Silicon Valley firms, will punish the owner of both Facebook and Instagram for failing to protect user data from the prying eyes of US security services. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, world leaders touch down in Japan ahead of the G7 summit. We take, of course, a look at the agenda. We're also looking at live pictures. Moments ago, I think about 50 minutes ago, President Joe Biden was walking out of Air Force One. This is in Japan, about an hour south of Hiroshima. Now, this is the Air Force One of Deutschland. I don't know if it has a name, but of course, it's Bundesrepublik Chancellor. So we're expecting Olaf Scholz to walk down momentarily. And you can see every G7 leader has his or her plane. And we'll look at all of the arrivals in great detail. This is Bloomberg.
Is holding a general election on May 14th, and the race to be the country's next prime minister is heating up. Dozens of candidates are eyeing the job, but the contest is expected to be mainly between candidates of the pro-establishment groups and a pro-democracy camp of opposition parties. On the one side, we have General Prayut Chan-o-cha, a 69-year-old former army chief who seized power in a military coup in 2014. He has ruled Thailand for nearly a decade since and is seeking another term under the banner of the conservative United Thai Nation Party. On the other side, there's 36-year-old Paetongtarn Shinawatra, the latest political figure from the Shinawatra clan that's dominated Thai elections but been routinely booted out of office. After stepping into politics in 2021, she's now seeking to follow the footsteps of her father Thaksin and Aunt Yingluck, both former Thai prime ministers, and both toppled in military coups 8 years apart. Paetongtarn has been leading in most popularity polls and winning approval ratings for opposition Pheu Thai party. Other candidates to watch out for from this camp are Sethta Thavisin, a former real estate tycoon who was also nominated for prime minister by Pheu Thai, and Pitta Limjaroenrat, leader of the progressive Move Forward party that's popular among young voters.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but, we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, U.S. President Joe Biden has arrived in Japan ahead of the G7 summit. His trip to Asia has been cut short, though, as a catastrophic default on the country's debt looms, or certainly negotiations on that continue. Joining us for more is Bloomberg's Paul Jackson in Tokyo. Paul, we're also looking rather excitedly at the arrival of other G7 planes. Deutschland and the Chancellor Olaf Scholz just also had touchdown in Japan. We know that all these G7 leaders, of course, have domestic issues. It's also a message for people back home. But what are they going to achieve together? What's the primary purpose, for example, of Joe Biden being there?
Well, I think he's going to want to walk away from this with some kind of gains, some kind of tangible gains. I think the main issues he's going to be looking at are Ukraine and China. Reaffirming the unity on supporting Ukraine after the invasion by Russia, trying to fill out some of these loopholes that Russia's been using to avoid sanctions, maybe making some progress on this export ban, some kind of concrete progress there. And some of the groundwork has already been laid by the meeting of finance ministers last weekend in Niigata, but upping the aid for Ukraine and filling out some of these loopholes that Russia's been able to avoid some of the sanctions with will be some tangible gains there that would help Biden. I think the G7 leaders are probably concerned that they don't want this meeting in Hiroshima to be overshadowed by the debt ceiling talks in the US, which already has caused Biden to curtail his trip. I think the G7 leaders are very keen to show that this is not a group of rich countries, a rich countries club that is only preoccupied by its own interests. Yeah. It also wants to reach out to the global south. As we've seen, it's been difficult to get the kind of unity on Ukraine and other issues, especially, also relating to China from the global south. And so there's been quite a bit of outreach, and there will be at this meeting of G7 in Hiroshima. To the global south, we've got representatives from Brazil, Indonesia, India there as well. And making progress in ensuring that G7 can go beyond and make more progress than maybe the G20 is
so
a key
important,
goal
Paul,
of this meeting.
Of course, as these countries, of course, may attach themselves to the bigger power in their own neighborhood instead of looking at the U.S. and elsewhere. Paul Jackson in Tokyo. Coming up, we'll have plenty more on the U.K. We'll also talk to the head of the CBI. This is Bloomberg.
The tag on the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability, and we have differences. We're capitalists, they're not, and it's okay. We could sort that out, but we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate while up. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
This is Bloomberg.
Okay, so you're moving in on me. Quick. Distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Well, good morning, everyone, and welcome to Bloomberg UK, your, of course, place where you find all of the news on the UK and Great Britain. Britain's scandal-hit business lobby group, the CBI, has hired BlackRock Elizabeth Wallace as a new chief people officer as part of an effort to recapture the trust of its members. Last month, the CBI fired its Director General, Tony Danker, after complaints of workplace misconduct. More than a dozen women who worked for the organization alleged that they were sexually harassed by colleagues. Two say they were raped. Well, Tony Danker was not implicated in these allegations. More than 50 businesses, including Aviva, John Lewis and NatWest, suspended or canceled their membership as details of the complaints emerged. Now, the CBI has since suspended most of its operations and promised to come back to members with a plan next month. Let's bring in Bloomberg's Lizzie Burden, who's joined by the CBI's new boss. Lizzie.
Thank you, Francine. Yes, I'm joined by Rain Newton-Smith, the new Director General of the CBI. Rain, it's great to have you on Bloomberg. You had a cushy job at Barclays and you've come back to lead the CBI in its darkest hour. I wonder what made you come back, but also whether you're the right person for this turnaround, given you were there when these alleged events happened.
Look, I decided to come back because I thought it was so important that we have a voice of business that can speak across regions, nations, and sectors at a critical time for our economy. We know the rest of the world is not waiting for us. We need to have an economy that is strong, that is tackling the big issues that are facing our society, from climate change to the cost of living crisis. So, and from what I've seen at the CBI and from what I know going forward is when we have the trust of our staff, our people, of stakeholders and wider society, we are able to be a really effective voice, working with other business organizations, working with trade unions on the really important issues of the day. So I came back because if I could play a role helping our staff and our people through a really difficult time and help with a really important rebuilding of our culture, to earn back that trust so we can get on to being really effective as an organization, it felt really urgent and really important.
Rain, the CBI is a subscription business, but the subscriptions are drying up. How long can you last?
Look, it like many businesses now, we face financial pressures, and I think that actually just gives us, you know, a sympathy and empathy and understanding for businesses themselves. It's not an easy time for any business at the moment with some of the high inflation that we're seeing across the economy. So we do need to be relentlessly focused on putting in place a program of change, and that's why, you know, it's only week 4, but already have a new chief people officer working alongside me to drive a program of change. We've got an organization who are real experts in global ethics, who have worked with with charities, with some of the very biggest businesses on how you really embed ethics right into culture right from the start. And so that's what I'm absolutely determined to work on, because I think as you started, you know, some of those stories we heard that I read about in the papers were horrifying. The idea that women would have some terrible experiences and not be supported by their managers. I don't know when all of those events occurred. But what I'm determined is that we build on some of the strengths in our culture that we've had as an organization, but that makes sure that everyone from this day forward, you know, where they have issues in a place of work, that they are supported. And we've seen many organizations, obviously not dealing with the depth of issues that we faced in the past few weeks, but we are not alone in facing issues around workplace misconduct. And
but Rain, have you seen any of the people, the members who have left, saying that they're considering returning now you've started this turnaround?
Well, you know, I've been talking to a lot of businesses, whether they're our members, whether they've left or whether they're in that pause, you know, essentially a wait and see. And what they want to see is that we're really serious about this program of change. They want to see implementation, but also, you know, everyone recognizes we need to show what we've done already, but this will take time, and we need to be able to embed not just what we're doing now, but show that we're committed to that going forward. Okay. So that's what they want to see. But so then they also really want to talk about the end of the day, right? And what is also becoming apparent is that without a collective voice that works with trade associations, from the National Farmers Union right up to, you know, technology, to all sectors of the economy, and is able to be a strong voice across regions, then we don't have a way of holding policymakers to account on some of the big issues of the day. So everyone is saying...
So, Rain, in that wait-and-see period, when are the redundancies coming?
Look, I'm not going to go on national broadcast and talk about, you know, individuals or our organization as a whole. We are facing financial pressures, but if we can earn back trust, and if we can show that we have a really important program of change, then I firmly believe that, you know, members will come back to us. And also there are many members who are still with us. Yes, we've lost a few dozen of members who have resigned, but we have many members who are behind us, who are talking to us, who want to know, they want to see change, they want to understand what's going on in the organization. And so we are really listening to them about what they need to see in that program of change, which puts people and culture front and center. But also they want to know about what will our purpose look like? How will we be an effective voice on tackling climate change and decarbonization across the economy? What will we be saying about skills and immigration? What will we be doing to tackle the really big issues of the day? And that's where I know I have over 100 talented policy specialists, economists, tax professionals, people who can really speak on these big issues of the day. And they are keen that they are able to be that effective voice, both to government and to the opposition.
You've got business leaders piling on to warn about Britain's prospects. BT announcing 42% of jobs being cut today. Why has Britain got anemic growth?
Look, I think it comes down to so many things. I mean, we're not alone. We're seeing weak growth across many countries in the world, across the G7. I think where the UK really needs to focus is thinking about our skills and talent over the long term. It's absolutely about investment and investment in a green and more sustainable economy. And I think one of the challenges we face is you have Biden with his you know, with all the things he's put in place with the Inflation Reduction Act to really have strong green subsidies. And you have the EU also pursuing a Green New Deal. The UK needs to get on the front foot and help to create some of those green markets of the future. We're the second biggest exporter of trade and services, and we need to make the most of that and really think about how we set out a positive vision for the UK on a global stage.
As part of that, though, is it partly a cultural problem? We've heard from some quarters that actually what we need is better pay for CEOs to compete with the US.
I think it's much more fundamental than pay. I think this is about making sure that it's easy for companies here to list in the UK. I think that is one of the challenges about how you make it easy for bigger companies to list here in the UK, and also how you start with very small businesses and how they're able to grow. So we can be brilliant on startups, but we're not always brilliant at scaling those businesses up and allowing them to access finance to become really big, brilliant businesses. So I think it is about the ecosystem on finance. It's about having important allowances to get investment going. But I think it's about those bigger fundamental things about what is our vision for for the UK on a global economy? How do we really compete in green markets, and how do we show that we have, the best? If you think we don't build enough about our universities, our creative industries, and I think we really need to think about some of the things that we are brilliant at and make sure that we are fostering those industries of the future and really promoting them both here in the UK but also abroad.
Ray Newton-Smith, CBI Director General, thank you very much for joining me. Back to you, Francine.
Thank you, Lizzie. At the same time today, we also found out that the UK is announcing a Japan chips partnership, maybe to move away from alliance from Taiwan. So that's something that we'll look at deeper. Coming up, British financier and investor Guy Hans joining us exclusively to discuss the future of the UK economy. That's next, and this is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Now, the UK labour market is showing fresh signs of cooling, with the number of payrolled employees dropping 136,000 in April, the first fall since early 2021. However, average weekly earnings, excluding bonuses, rose 6.7% in the first 3 months through March, up from previous reading. Now, inflation, of course, remains well above the BOE's comfort zone, with CPI at double-digit levels. We'll get the April inflation print next Wednesday. Economists surveyed by Bloomberg see that coming in at 8% year-on-year. Now, the soaring cost of living is also driving workers to walk out from their jobs in an effort to secure better pay. The Statistics Office says Britain has lost another 556,000 days in March due to strike actions. That's the highest figure for the month since 1984. Now, against that economic backdrop, the UK is also facing rising scrutiny over its investment prospects. My next guest is one of the UK's most prominent financiers and is extremely pessimistic about the country's outlook. Well, joining us now is Guy Hans. He's chairman and founder of Terra Firma Capital Partners. Guy, always a pleasure to speak to you, so thank you so much for coming on. We're a very different situation than we were in the turmoil of autumn of last year. Do you still think that London and the UK are losing their global appeal?
I mean, definitely yes. I mean, I think it's actually getting worse. And one of the things about change is it takes much longer to occur than one ever expects, and then when it does occur, it's much quicker. And people forget that the UK became a financial centre in a very short period of time, really 1979 through to 1986, and it was largely through some, frankly, quite innovative thinking of the Thatcherite government. Today, we're unwinding that situation by reducing our relationship with the rest of the world. And I'm not sure when the tipping point comes, but we're definitely losing our global appeal. And at some point, the tipping point will come and we'll suddenly find that the City of London really has suddenly become almost unimportant on a global stage.
But Guy, what do you say to those that think there's just too much pessimism out there, that they're emphasizing the breadth and depth of London's capabilities, and so with the right regulation and a great growth plan, we'll get back on track?
Yes, that's fine if the people want to stay, but people are showing that they're leaving. People are going to Lisbon, they're going to Paris, they're going to Amsterdam, they're going to other countries, and as that expertise leaves, you eventually reach a tipping point where the reason to be in London disappears. And one of the things people seem to forget is the invisible earnings and the actual cash value of the City of London is vastly greater than just what's produced by the banking industry. You have the whole legal industry. The legal industry is worth more to the UK in foreign earnings than, frankly, car manufacturing. And it's also got an almost 100% profit basis, as opposed to car manufacturing, it's about 5%. And the fact that no negotiation was done with regard to the relationship between the city and Europe during the Brexit negotiations is really quite extraordinary. And all we need is for the French, and they're the most likely people to do it, to say, fine, we want laws done under European law rather than the English law for the City of London to pretty well be worthless as a place to do business.
But Guy, would that ever happen? English is still the international language. I mean, we love the French, but not many people speak French compared to how many speak English. So how difficult is that?
It's not really a question of what language, it's a question of what is the law. If you're doing a contract today in Europe to buy a European business, you would do it under local law, I think. If you don't, you're at your peril. So the deals we do now in Europe, we do not do under English law. And the reason we don't is because we don't think a European judge has any reason to respect English law. So if you're going to do a deal in Sweden, do it under Swedish law. If you're going to do a deal in Italy, do it under Italian law. And that is very different to where we would have said 15 years ago.
Is there anything that the UK can do now to get back on track, or do you think it's too little too late?
The only thing they can do is to really try and negotiate a Swiss or Norwegian style deal with Europe. I think it's getting more and more difficult. The reality is that the UK is getting poorer. The current predictions are that by 2030, the Poles will be wealthier than the British. And that's an extraordinary situation if you look at where we were, say, in 2008. And, it's an interesting thing that people wanted to stop immigration from Europeans. Well, we've done it just by being economically not an attractive place to be. I mean, it is quite extraordinary, but even if we rejoin the European Union tomorrow, my guess is actually most Poles who were here in the past would not come back.
So what does that mean? Yeah, I mean, there are, and you hear that, right, in certain corners saying, look, we could rejoin the EU. I mean, it was a sovereign vote. We just need to move on. Is there not anything that the UK can do in changing laws, in changing how the city operates to attract new business, especially at a time when pound is weaker, so it's actually cheaper to attract international investment?
I think it's very difficult. If you look at international investment in terms of industry generally in the UK, we are an extraordinarily bureaucratic country. The EU got blamed for our bureaucracy. The reality is we've left the EU and we've lost none of that bureaucracy. If anything, we've actually increased it and there are more rules. Compared with doing business in any European country that I do business in, the UK is vastly more difficult. It doesn't matter whether it's employment, it doesn't matter whether it's health and safety, it doesn't matter whether it's regulation. It is a more difficult place to do business. Now, we were promised that the government would tear up all these rules and make it easier. The reality is they've actually just put more rules in place. The employment rules in the UK, compared with doing business in Germany or in Norway or Italy even, are just extraordinary. So the first thing the government needs to do is to actually wake up and start pulling back some of the regulations which are there, which are not European. These are regulations we've put in. It's the British establishment which has managed to tie us all in knots far more than the Europeans.
When does that change, Guy? Is this just because the government was distracted? And again, there's a school of thought that says maybe we're a little bit worse off, but if you look at the labor laws in France, it's difficult to fire someone. They took to the streets. Paris was burning because the retirement age increased by 2 years. So comparatively, the UK still looks okay.
Relative to France, and I don't do business in France, and you just summed up why I don't do business in France. But I do business in Germany, I do business in Norway, I do business in Finland, I do business in Italy. So to choose the worst example in Europe of labour laws and say, hey, we're better than them, is a little bit absurd. And of course, the French are very much at the centre of the European Union, so they can use the European Union to still succeed. Now, there's no question in my mind, if France was out of the EU, it would decline at an extraordinary rate.
Right.
But France is part of the EU, and they can work within the EU, and that supports them. We're not part of the EU. And when you come out of an organisation as big as the European Union, you have to be better. It's not about being as good. You have to be better. And the reality is we are not better. And the
How would
first
you make it better?
stage, I would probably simply, the simplest rule to bring in is you have no new rules introduced, no new laws unless you abolish 5. You need to do the very things that the Brexiteers said they would do, but they have not done, which is you actually have to roll back the state enormously. And that is the only chance, really, I think the UK has. It has to become attractive to entrepreneurs, it has to be attractive to business people, and at the moment, it simply isn't. It has the disadvantage of being not part of Europe, and it doesn't have the advantage of less bureaucracy.
I mean, rolling out, or the Big Bang 2, isn't that what they tried to do in the autumn with the mini budget?
I don't think so, no. I don't think they've even got close to trying to actually do anything. When you try to make change, you get an enormous amount of resistance. And if you take somebody like Rab is not someone I would support in a million years. But the reality is, he was actually trying passionately to make change, to make a difference. Now, if we live in a situation where a politician who is aggressive is going to get kicked out, you're never going to get any change. And, I think the civil service does an amazing job. But somehow the government has to work with them to make the changes which they promised us. And it's not like the Conservative Party hasn't had a long time to make those changes. And we're not getting a freer state. We're not getting less regulation. We're not actually getting a more attractive economy for entrepreneurs.
Okay, Guy Hans, thank you so much. I know you also made world headlines in saying that the UK needed an IMF bailout, so we'll continue the conversation on the podcast to see whether that's still what you think. Guy Hans, the chairman and founder of Terra Firma Capital Partners there. We'll have plenty more throughout the day on the UK. This is Bloomberg.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority. The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability, and we have differences. We're capitalists, they're not, and it's okay. We can sort that out, but we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority.
I've seen what the company said. The business secretary has made it very clear that she's talking to the European Union. She's very clear that the government's position is that we want a thriving automotive sector. And look, I just say something that's come up in my visit to the US. We've set out a very ambitious zero-emission vehicle mandate, which is more ambitious, actually, than the one that's been set out by the European Union, for example. And when I was here in the US talking to Ford, they've made it very clear they are all in on hitting their electric vehicle target. Their targets are completely aligned to what we're trying to do in the United Kingdom. So I think the UK is a very attractive place, both to manufacture electric vehicles, but it's also a very attractive market for businesses doing that electric vehicle and that zero-emission vehicle transition. We want to move very quickly on that. We've set out, as I said, a very ambitious target, and I think we're aligned with what many of the global car makers are trying to do as well.
Well, that was the UK Transport Secretary, Mark Harper, on the UK car industry. Bloomberg Surveillance Early Edition continues in the next hour. Kriti Gupta in New York, Anna Edwards in London, and this is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists, because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Confident that we'll get the agreement on the budget and America will not default.
I'm optimistic for America because the people standing behind me. I'm optimistic of our ability to work together. Do we have obstacles? Yes, we have a big obstacle in the White House.
Getting to this point before lifting the debt ceiling is far too much drama for what it should have been. We should have lifted this months ago.
I'm an optimist, so I believe that the cooler heads will prevail and that it'll probably come up to the brink, but that we will come to an agreement.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Leaders from the Group of 7 nations gather in Japan for their summit. Russia and China will be the problems at the top of their agenda. President Biden says he's confident a deal can be reached to raise the debt limit and avert a default. Negotiators from the White House and Congress are trying to resolve their differences. And another indication of whether the U.S. consumer is resilient in the face of rising prices, we'll get quarterly earnings from Walmart this morning. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Kriti Gupta with me, of course, in New York. And Kriti, we continue our focus on the U.S. consumer this week. Plenty of data. We also continue to focus on the debt ceiling. The mood music around that has improved, it seems, over the last couple of days.
Improved a little bit. It feels like the message is starting to be received in Washington that Wall Street needs answers to some extent. Anna, the idea is here simply that Joe Biden has now kind of limited the amount of players that are involved in these discussions is a good sign at the end of the day. But of course, a lot going on, a lot of pressure, not just from here, but internationally as well. Of course, we know he's at the G7 summit. I imagine he's getting an earful about just how dire the situation is and the global consequences around that. We're going to go to Japan in just a moment to get that update. Futures right now, a little bit unchanged, only higher by about 0.1%. Not seeing a ton of movement, Anna. But what's important to note is that even though on the macro front, it's kind of calm, it feels a little stale, underneath the hood, we are going to get a lot of kind of indications of what might come next. Remember, Walmart earnings coming out this morning as well, Alibaba earnings as well. The idea here that maybe with the micro stories, we can infer what the macro narrative actually is. So futures at the moment, perhaps waiting for a little bit direction on that front. The bond market, though, a little bit of a different story. The 2-year yield at 4.16, again, shooting far above that 4% level. Does it stay there is the question, especially as we get developments on the bond market story. But again, with those higher yields, although this in the pre-market session is not showing up, but again, overnight it really did. With those higher yields, the dollar goes with it, stronger by about 0.3%. We're going to talk about this, a really interesting dynamic. Do you buy the dollar? Do you go long the the dollar on the debt ceiling drama, or do you short it on the fundamentals? There's kind of an inverse correlation there. We're going to dive into that as well. NYMEX crude, of course, Anna, our favorite commodity to check, trading at a 72 handle, down about 0.6%. In direct conflict, by the way, with the risk sentiment you're seeing in futures. I want to quickly hit what's going on in Asia because some interesting news overnight. The Nikkei higher by 1.6%. This is an enormous move for the Nikkei in terms of what level it's hitting. So you really want to keep an eye on where the Japanese stock market, whether it's able to really sustain those gains in the long term. But to me, I think the currency story is fascinating, especially as we talk about the debt ceiling drama, the dollar story, whether or not you long or short it. Well, the Chinese government kind of made an interesting call on the yuan, a stronger than expected fix. We're looking at 7.04 on the offshore yuan rate, Anna. Interesting to see the global dynamics here.
Yeah, we continue to watch the Chinese currency after that suite of poor data at the start of the week, and the Japanese story getting a lot of attention from Warren Buffett, Goldman Sachs. Lots of our guests, of course, have been positive on Japan and its stocks. Let's talk about Europe then, and Chrissy, we've got European stocks catching up with what we saw on Wall Street yesterday, essentially. So US markets closing not far off their session highs yesterday. That's filtered through into the Asia session and now into the European session as well. So we see positivity almost across the board. Let's dive into some of the specifics around the European story, and the German market stands out as an area of bright green for Europe, and part of that to do with the strength of the auto sector, a very cyclical sector. Most sectors in Europe have been in positive territory this morning, but the auto space has stood out as one of the better gainers, along with banks and technology. I put in the German 30-year yield. I could have put in all kinds of yields across Europe because the trend seems to be for it's a risk-on day, so selling of bonds and yields going a little higher. That seems to be the vibe we're picking up on here in the European session. And a couple of corporates that really go against the risk-on grain today. BT Group, big player in the telecom space in the UK, they are cutting up to 42% of their workforce. This as a result of, well, they have to invest in fibre in the short term, but once that is done, then they want to certainly cut back on staffing levels at the business, both full-time employees and also contract staff. So that's stock down by 6.8%. Some of the disappointment, though, attached, it seems, to the short-term cash flow forecasts and the lack of maybe explicit guidance. Burberry is down by 5%. This is a fashion name, of course, also based in London. And here we have a company that has given results to the market. It seems that the market not as impressed as it has been with some of the other players in this space. Yes, there's recovery in China, but there's weakness over in the US, and we'll talk about that later in the program, Chrissy.
Of course, and the macro narrative, again, to your point, Anna, really surrounds what's going to happen with the debt ceiling. But there's also some other geopolitical news. President Biden has arrived in Japan ahead of an annual meeting with G7 leaders. The summit begins tomorrow in Hiroshima, with concerns around China and Russia set to dominate the discussions. Bloomberg's Anne-Marie Hordern joins us now on the ground in Hiroshima for more on what to expect. Anne-Marie, walk us through it.
Yeah, well, the debt ceiling is one that looms large over the president as he's now landed in Hiroshima, is going to be meeting at this summit with other world leaders for the G7. The other big elephant in the room, of course, is going to be China. And we do know the administration really wants to come out with this broad framework about economic coercion when it comes to China. Not sure yet exactly how this will be illustrated in the communique. Jake Sullivan on the way over on Air Force One didn't want to get into the details or ahead of it, but obviously he said this would be a dialogue. But the devils are in the details, because there clearly is a gap between the United States and Europe and about how hard they want to go against China, while also balancing the trade, investments, and supply chain reliance each individual country has with Beijing. So really, what comes out in terms of not just broad language regarding China, but potentially what can be done on a multilateral basis is something that everyone here is watching on the sidelines of the summit.
And good morning to you, Anne-Marie from London. I heard one of our colleagues describe this as a sort of split-screen event where you've got one eye on what's going on in the G7, but the other eye firmly on what takes place in Washington. The president, no doubt, will be distracted by events back home. What's the latest there?
He certainly will be distracted by that. And, you know, he's going to have 1 year on the ground in Japan, and the other year is going to be firmly in Washington. He made it a point to come out before he left for this trip to make a press statement saying that he is confident that he thinks there could be an agreement on the budget. That's what he called it, the budget, and to avoid the U.S. going into default. Obviously, it's drawn a number of criticisms from Republicans. Speaker McCarthy said the president is hiding, asking the president, why are you traveling? Well, the president cut his trip short. This international trip was also supposed to include Papua New Guinea as well as Australia to make sure that he could get back to Washington. So he now has a smaller group of negotiators dealing with Republicans, and they think that they can get a deal. But obviously, there's a number of big issues that still need to be hammered out. Republicans are really digging in when it comes to spending cuts, to COVID spending that was unspent, work requirements, energy permits. There's a lot of details that need to be worked out. And the president did say, though, he did not think an agreement would be struck by Sunday when he's set to arrive home in Washington. But he is returning early to make sure that they can get this deal done because we are fast approaching June 1st.
Bloomberg's Anne-Marie Horder, and I swear she gets the best assignments all over the debt story and the G7, reporting from Hiroshima. In the meantime, as we, of course, get off the Japan story, President Biden making some comments here. He is working on partnerships between Japanese and American companies. We know overnight there has been some talk about Japan investing in Micron, for example, the #1 U.S. producer of chips. So there are seem to be some partnerships already underway. President Biden saying we stand stronger, believe the world is safer when we do actually work together. This, of course, coming on the idea of the debt ceiling and how they can collaborate. Also saying that they're working on nuclear non-proliferation, really crucial in the context of what Anne-Marie was just talking about with China and Russia on the table. And of course, reiterating his support for the people of Ukraine. So of course, we're going to bring you all the latest headlines as we get them. Meantime, stateside top investors have been weighing in on those debt ceiling talks. Anthony Scaramucci and Mark Lazary spoke with Bloomberg's very own Sonali Basak at the SALT conference in New York.
I hope our public officials are smart enough. I get the posturing and the peacocking, but I hope they're smart enough not to go over the line.
What they should focus on is acting in the best interests of Americans. Why do we want to default? It makes no sense. And so we shouldn't default because it's going to create a lot of issues and a lot of repercussions that we don't fully understand or know fully about. So there's no reason to go down that road.
Well, Sonali Basak joins us now. After a whirlwind day, I have to say, what are some of the key takeaways from the top investors at SALT? What are they panicking about?
Listen, the debt ceiling issue is kind of near term in the scope of things, but if you see what they're saying, it's kind of out of their control. You're hearing investors say they hope they don't get there, that it makes no sense, but it's at the whim of the U.S. government, frankly. There's a lot of talk about what the Fed would do in this instance. Would they create some sort of facility to accept collateral? It's a difficult equation here, not knowing what the reaction would be from the government, even if we even made it to that point, and if we made it to the point that the U.S. is downgraded as well. So a lot of uncertainty still. Looking through the noise, both through the U.S. debt ceiling and the recession, you had a lot of talk about what it looks like coming out of such a scenario, what the impact of AI would be. A lot of hedge funds, remember SALT in particular, very well tied to hedge funds, a lot of focus on AI and how much of a boost that would be to productivity and how much of a knock that could be to jobs and what it would mean for rates in the future.
Okay, so Sonali, some very worthy, important conversations around the debt ceiling taking place at SALT. Some other conversations, though, about investment opportunities. You were picking up tips on where to put your money in the pickleball arena, I understand. That seems to have gone slightly off topic.
It's funny because I was worried about asking about it, frankly, Anna, because, again, there are some really serious discussions going on about near-term hiccups in the market. But sports, frankly, is one of those things that's just another private asset now. And when you look at these large money managers, they're trying to make sports as retail as possible. Retail meaning high net worth individuals investing in large sports teams. But yes, Mark Lazary loves pickleball. Yeah. A little less underweight NBA, overweight pickleball.
Okay, later you can explain to me what it is. Right, let's get to another more serious topic of conversation. I know this is something that you've been following crucially, where banks are cutting back, Sonali. Nomura slashing its profit targets across the board and planning a major review. What do we know?
Yeah, listen, I mean, you have to realize that profitability has been really under pressure. It's fallen for 3 years under the current CEO. And now when you look at it, they've had other kind of larger hiccups in the past, think Archegos, but now it's interest rates as well, macro, that is posing an issue for Nomura. It is the biggest brokerage in Japan, so it's why we watch it so closely across the globe. It did have a lot of ties to U.S. capital markets as well. So what changes are made as it faces such pressure on profitability is of pretty high interest here. And another bank around the world where you would think that higher interest rates would be helpful is not the case in the case of Nomura.
Okay, thanks very much, Shanali. Bloomberg's Shanali Basak with the latest from that SALT conference. Let's get to what's going on in China right now and the corporate reporting season there. China tech giant Alibaba reporting before the US market open. The company's split-up plan will be a key focus, of course, for markets. Joining us now is Bloomberg's Tom McKenzie, who can tell us what's going to be in focus. Tom, good morning to you. So what are our investors going to be watching for?
Yes, Anna, it is that restructuring plan. This is pretty dramatic in terms of the announcements on the back of some of the easing around the regulatory squeeze that tech has seen in China. So 6 potential units that have now been given their own heads and been given jurisdiction to go ahead with either raising capital, listing, or spinning off from the holding company. That's going to be really important. Morgan Stanley is saying there's potentially $200 billion that could be given back to shareholders over the next 3 years. Parts of the business like Cainiao, which is their massive logistics arm, for example, potentially valued at about $20 billion US. Bloomberg reporting suggesting they could be first out of the gates with their IPO. The e-commerce parts of the business overseas, so Lazada and AliExpress, they could be in the mix as well. And then you've got the cloud part of the business. So it's the restructuring, it's those 6 units, and it's about returning cash to shareholders. That's what investors are going to be listening out for, particularly on the call. And then, of course, there's the litmus test, the gauge of the health of the Chinese consumer that comes through from Alibaba.
Well, of course, we talk a lot about the consumer stateside and the U.S. consumer, but of course, the Chinese consumer really growing in global importance. How much of a litmus test are these earnings going to be on the health of China's consumer?
Yeah, they are growing, absolutely. And it's a bit of a mixed picture. You know, you only need to look at European luxury to see the demand and the support that's coming back from China's high-end and wealthy consumers. But on the flip side, you are seeing record high unemployment amongst China's youth. So 16 to 24, above 20%. You're close to kind of Spanish, Italian levels of unemployment. That is really important. The real estate market remains very subdued as well. House prices continue to soften. That is a challenge. It's a big part of your net wealth if you're a Chinese household. 20% of China's GDP comes to or is linked to the real estate market. So we are looking to see if Alibaba and the e-commerce drive there can kind of flesh out the picture in terms of just how resilient that consumer is. JD.com, by the way, one of their main competitors, actually beat in terms of their results. So they showed that there is some resilience there. Alibaba may be able to round out the picture for us.
Okay, Tom, thanks very much. Bloomberg's Tom McKenzie with the latest on the Chinese investment space and Chinese corporate reporting. When we come back, we will talk later in the program to Koku Agbubloa, who is a global head of economics, cross-asset and quant research over at Societe Generale. We'll certainly keep the debt ceiling on our radar. We'll also talk about the inflation drive, though, and the drive to pull that down. We'll also get talking of the US consumer. We'll take stock of what we're going to hear from Walmart. It's set to report results this morning. More on what to expect about the strength of the US consumer ahead. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, it's all we've been talking about for the last few weeks, probably will be talking about for the next few weeks, the idea of the debt ceiling and what happens. What's the trade as we get closer and closer to the X date? Well, remember, some of the debt default is coming due on June 1st, as early as June 1st. We still don't know if that itself is the X date, but the question is, in the bond market, you're already seeing that volatility pick up. I gotta say, you're seeing it in the FX market as well, and here's how. For our radio audience, stick with me. We are looking at a chart here on just how speculators are positioned when it comes to the dollar. And really what you're seeing is that in the last few weeks, really I want to say since the end of March when the debt ceiling talks started to pick up, you see massive inflows into the dollar. A lot of green on the screen in the last couple of, I want to say 8 weeks or so. But the question is interesting here because if you're questioning the full faith and credit of the United States, then fundamentally you would want to go elsewhere. And that's a theme we've talked about on this show and throughout Bloomberg Television and radio. To what extent does this create some sort of flight to the UK gilts market or German boons, for example, or FX that's anywhere but the dollar? But I got to say, 60% of the global transactions are still based in the greenback. So even the irony is when you start to have these debt ceiling talks or the risk of default, people still venture into the dollar. And that's exactly what you're seeing ahead of that scary X date. Is that the right trade, though? Joining us now to tell us whether we're right or whether we're wrong, Eddie Vanderwall, Bloomberg Markets Live editor. Eddie, what do you make of the dollar move? It feels like it's a no-brainer, but at the end of the day, it doesn't quite make sense, does it?
Gritty, I will never presume to tell you that you are wrong. I wouldn't go that far at all. But look, I think the narrative has got way ahead of where we should be right now, right? Yes, sure, in the very long term, right, nations rise and fall, and eventually the sun will cave in on itself. But in the meantime, right, the dollar is the world's reserve currency. And if we see a US default, investors will flow very heavily into the US dollar because that's where safety is and that's where the liquidity is. And you will see them sell things like, you know, presumed havens like gold and bonds of other countries purely to get into the dollar, because that is where they have gone in 2008 when we had housing prices that started in the US, and it's where they went post-COVID. So I think we will see the same thing again here.
Okay, I mean, keeping it in the here and now, because believe me, we haven't got time to think about when the sun caves in on itself, Eddie. But so that you think the dollar holds its own, even if the problem emanates from the United States, and you say we've seen that before. What about gold holding its own then? Because gold is maybe something, a haven for some people they want to get into, but at the same time it's very liquid, and in times of trouble, what gets sold?
Look, gold is a haven. It's a great portfolio diversifier. But in those moments of acute crisis, I looked at the data over the last couple of days, gold tends to sell off very heavily. Immediately post 2008, post the crash, immediately in the COVID crisis, we saw gold prices sell off heavily. And that's how you know things are really bad. If you see gold prices, you know, staying stable or rising while stocks are selling off, it's not that bad. If you see gold prices and stock prices falling together, then you know investors are selling absolutely everything they can to make those margin calls, to get that liquidity, to keep their, you know, their books ticking over. So yes, I think gold does sell off in the immediate aftermath.
Eddie, thank you very much. Eddie Vanderwelt of the Bloomberg Markets Live team. You can find further market analysis. Check out the Markets Live blog on the Bloomberg terminal. MLIV Go, that is the function to use. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
In Big Ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Deutsche Bank will pay $75 million to settle a lawsuit in the United States involving the late disgraced financier Jeffrey Epstein. Victims of Epstein's sexual abuse accused the German bank of facilitating his sex trafficking operation. JP Morgan faces a similar suit. China has kicked off a European tour aimed at brokering peace in the war between Russia and Ukraine. A top Chinese diplomat met with Ukraine's President Vladimir Zelensky this week. Li Hu told Zelensky that ending the war would require all parties to build up trust. Ukraine has said it won't accept proposals that include the loss of territory. The state of Montana has now banned TikTok. That sets up the first legal and logistical test for broader efforts in the United States to restrict the wildly popular video sharing app. The Montana law prohibits app stores from offering the app to people in the state, but enforcing the restrictions for current TikTok users could be more complex. Anna, it's a fascinating story because we know on a federal level, this has been something that has been brought up in Congress time and time again. But again, it comes down to the enforcement. For a brief moment, TikTok was taken off of the Apple and Google app stores. And in this early draft of the bill for Montana, it looks like they tried to involve the likes of AT&T and Verizon, and it's essentially saying that in those networks, those 5G networks, to not have access to TikTok at all. They're getting creative, Anna, when it comes to enforcement.
Right, and it seems we might see legal challenges against this attempt in Montana. Will it spread? Will there be other parts of the United States who go down this road? And as you say, we've seen plenty of focus on this in Washington. I remember seeing the boss of the business in front of lawmakers trying but managing not to convince them that there was enough of a gap between the business and the Chinese government. And that really, for many, remains the problem. Will the future of TikTok in the US be guided by ideology, or will it be about sort of political pragmatism, which will be most popular with voters, banning it or keeping it? Up next, we'll talk about the markets. This is Bloomberg.
Manchester, not London, is the best place to find a new job in the UK. That's the surprising finding of data analysed by Bloomberg from Reed Recruitment. While you might think that London is the biggest pool of jobs, which it is, Manchester is leading the way when you look at the number of jobs per local worker. Thousands of voters in the so-called Red Wall seats flipped Conservative in the last election, hoping that the Conservative government would be able to bring more wealth and prosperity to their area. However, the data still show a country where employment prospects are thin on the ground in large pockets of the northeast, northwest, and areas all around the coast. Aside from Manchester, the only areas that are really leading the way are Cambridge, Reading, and Milton Keynes, indicating the good news for the rest of the UK might stop there. With Prime Minister Rishi Sunak facing the prospect of a general election as soon as next year, the pressure's now on for him to find ways to spread wealth outside of London to some of those more neglected areas. In Chancellor Jeremy Hunt's budget, he unveiled plans for 12 new low-tax investment zones around the UK and £760 million of spending on infrastructure and regeneration. Manchester's one of the oldest devolved areas in England, and there are signs that that's really beginning to pay off. What's on Jeremy Hunt's plate now is whether he can spread that success to other regions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Leaders from the Group of 7 nations gather in Japan for their summit, Russia and China at the top of their agenda. President Biden says he's confident a deal can be reached to raise the debt limit and avert a default. Negotiators from the White House and Congress are trying to resolve their differences. And another indication of whether the U.S. consumer is resilient in the face of rising prices, we're going to get quarterly earnings from Walmart this morning. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, a lot to digest. I got to say, in the absence of the macro, we do have the micro that might give us some indication of maybe where traders should put their money.
Yeah, absolutely. Certainly we'll get to some corporate stories in just a moment here for Europe, Kriti. But sticking with the big theme, we are still dealing with yesterday's macro, if you like. So picking up with the positivity on Wall Street yesterday around whether we'll get some progress this week, perhaps, on the debt ceiling, or will we have to go to the edge, go to the brink, look over it, not like what we see, and step back. Maybe that's next week I'm describing there. But this is the Stocks Europe 600 up by 0.5% as a result of some risk-taking here in Europe. And we have, in keeping with that, the auto sector as one of the best performing, along with the technology sector, banking sector, all doing pretty well. So we're up 1.5% on some of those automakers, in particular, the German ones, doing well today. To the downside, though, and Kriti, referencing your points around, in particular, micro stories, we've got BT Group down by 6.7 or so %. And this is a business that over the next 7 years is now planning to cut back on some 42% or up to 42% of their workforce. They have a big rollout of fiber broadband to undertake. But once that is done, they plan to cut back substantially on full-time, on payroll employees, but also contract staff. And so, but that stock actually going down as a result of more near-term concerns around the guidance or lack of explicit guidance today. Burberry is down by 6.4%. Also another London-listed business, Kriti, out with numbers today. Optimism in China, but not enough growth for analysts in the United States, and that seems to be weighing on the stock today.
It's because I haven't made my purchases at Burberry yet, Anna. I think that's the real Achilles heel for their earnings story. But I think your crystal ball on the macro front is 100% right, because that's exactly what you're seeing in futures. The idea here, there is a little bit of cautious optimism baked in. I would say a lot of that sentiment you're seeing in the U.S. market is perhaps a function of what you're seeing in the European market, some of that sentiment pulling over. Futures high by only 0.1%, though. So the conviction, the momentum you really need for a little bit more confidence for the bulls, not really there yet. I would say there's a little bit more volatility in the bond market here. here, 4.16 on the 2-year yield. Again, it's unchanged on the surface, but if you look at the intraday movements, that's where you see the choppiness as something that is translating into the dollar as well. The strength in the Bloomberg Dollar Index to the tune of about 0.3%. Again, the irony of challenging the full faith and credit of the U.S. government only makes people want the safety of the dollar even more, and you're seeing that kind of become a theme for the last 8 weeks or so. NYMEX crude as well, trading at a 72 handle. That strength in the dollar really does not help the bull case for commodities across the board, so you are seeing a little bit of pressure there, down to the tune of 0.6%, Anna.
Let's get into a conversation about where we are in markets then, Chrissy, and do that with Kokou Agboubloua, who is the Global Head of Economics, Cross-Asset and Quant Research at Societe Generale, and joins us now. Kokou, so nice to see you this morning. So you say in your notes ahead of our conversation that the debt ceiling conversations are unlikely to trigger long-term systemic crisis. Like many people, there's a general assumption that we get some sort of deal done here. So what detail are you watching for that could be crucial?
Yes, this is an important point. I mean, the big debate with clients is whether this is a storm in a teacup or a teacup in a storm. And we've obviously been here before. And if you look at some of the indicators we are essentially monitoring is the 1-year CDS of the US. And this is clearly has gone up quite significantly by roughly increased to 150 basis points, which is so 3 to 4 times the average credit spreads of European governments. So I think we also look at the VIX, which is funny enough pretty low in that respect. So the fear index is not as sort of severe. And I think the disconnect between the equity market and the sort of treasury bills is the risk of a technical default, which could potentially trigger sort of more volatility in the short term. But the assumption, similar to Newton's third law of motion, I think the market is going to force action by Congress to get a deal. I mean, the risk is more of a technical nature as opposed to sort of challenging the full faith and credit of the United States government.
Okay, and take us through the difference between those two then, Kokou, and how that looks different in markets.
Well, I think if you remember sort of 2011, I think if we were to have a technical default, then we could see equity markets down sort of 15–20%. But then the assumption is that we would have a pretty strong reaction by the government to essentially fulfill their payments, and that could lead to a pretty significant rebound or rally. But you would essentially create a lot of turmoil and volatility in the short term, and we don't think this will be obviously systemic going forward.
Well, you said volatility in the short term, Kokou. Good morning from New York. The idea here that, I mean, you are the head at the end of the day of quant research. The idea of volatility, isn't that for some parts of the market actually a good thing? The idea that market makers perhaps are benefiting from this sort of thing?
Absolutely. It's definitely create flows and a lot of fear and greed. And ultimately, this is from a market activity pretty conducive to portfolio rebalancing, etc. That being said, there are different types of volatility. If we have gap risk and that creates high volatility but low liquidity, this is where it becomes damaging for the normal functioning of markets. So our view is essentially to hope that there is not sort of market dysfunctioning and lack of liquidity. And this is why a lot of the clients we talk to are essentially allocating more into cash, because now you're getting rewarded between 4 to 5% to wait, and then trying to reallocate capital as visibility and uncertainty improves.
Kokou, how does that work in terms of hedging, though? Because it sounds like the general environment, what you're describing here, is simply pulling money out of the markets altogether, waiting on the sidelines until there is more direction. But how do you hedge this?
Well, this is a great question, because I think for clients, you simply try to monitor markets that are sending you conflicting messages. So if you look at the bond market, for example, the yield curve is pricing a number of cuts in the second half of the year, essentially pricing an imminent recession. So there is a lot of fear, and I think this was triggered by the US regional bank crisis. And then if you look at the equity market in the Euro stocks, for example, we are roughly 15 to 20% above where we were in 2019. And the VIX is also pretty low. So the equity market is essentially saying, well, this is business as usual, because profit margins are pretty strong, driven by greedflation and pricing power by corporates. And this is why you have profit margins levels not seen since 2007. and the bond market is pricing fear. So in terms of hedging, you can think about buying put protection or equity puts on sort of the more weak balance sheet stock in the US, so Russell small caps, for example, and then try to fund that with some position in treasuries to pay from the premium of your option. So you can think about contingent puts or simply relative value between rates and equities.
Koku, you talked about how some people want to go to cash and you get 4 to 5% and then you can get that whilst you're waiting to work out what happens from here. You also suggest IG bonds and emerging markets. And I wonder what role EM plays here, because typically if we get pretty risk averse next week, if this goes down to the wire and risk assets sell off, then that might not be the best place to hide. So what role does EM play here?
Well, I think the argument is more from a portfolio diversification. So in terms of pricing and risk-adjusted return, one of the things EM typically does well is when we see a peak tightening of the cycle and a peak in the dollar. So if we were to have a scenario of more market dysfunction, then the argument that the Fed will have to tighten further from here is going to be less likely. And this would ultimately mean the end of the tightening cycle. And this could essentially be sort of conducive to a better performance in EM. And you also have to remember that the recovery in China has been more disappointing than expected because it is more service driven than it is goods and infrastructure and housing driven. So we think that this will take time, but ultimately that should be a positive contribution to the emerging market, particularly the Asia ecosystem.
Koku, thank you very much. Thanks for joining us. Koku Agboola of Societe Generale, thanks for being with us this morning on the programme. Coming up, we'll get back to the US consumer and retail. Walmart is set to report results this morning. More on what to expect from the US consumer ahead. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that actually people's views on travel have changed. This is now more a priority versus house renovations or going out for dinners or doing other things with the discretionary spend that you have. And I think that now 45% of UK consumers say they were more likely to book with a low-cost airline. That means that people gravitate towards value, which is exactly what you've seen in other times when there have been, challenges on households.
That was the EasyJet CEO, Johan Lundgren, speaking to Bloomberg TV a little bit earlier on today, reporting better than expected first half results, also talking positively about the UK as it announces some expansion plans, some growth, and saying it's a sign of commitment to the UK. Now, let's get more insight into the consumer globally and look ahead to Walmart's earnings due at 7 a.m. New York time. Simone Foxman joins us now with a preview on set with Critty in New York. Simone, very nice to have you with us. So what have some of the earnings that we've seen so far, what have they suggested we will hear from Walmart, I suppose?
Well, it's interesting to hear from Johan Lundgren there because we have seen the move to value. For the most part, we've seen the consumers spending less each time they go to some of the higher end stores. We've seen, or we expect ticket price to come down substantially at Walmart today. We've also seen them just shopping less and really focusing on the essentials. That was the case for Target, which saw sales of beauty products, saw sales of household essentials rise during the quarter, but sales of those more discretionary items fall. We've also seen that move to value in some of these comp sales that we saw at TJX yesterday, which owns TJX and Marshalls stores, saw particularly strong performance at those two stores. And so that all could play into what we see from Walmart today. Remember, Walmart is a place that maybe higher-end consumers go more when they're looking to save a buck, but also a place that lower-end consumers shop too. So lots to consider here.
It's that exact dynamic that I love Walmart for so much. The idea here that when the higher end consumer wants to save a little bit, they go to Walmart. And for that reason, in recessionary periods, the stock just kind of skyrockets. It's a really interesting dynamic.
And certainly the last couple of years, Walmart has been a beneficiary.
Totally, which is really interesting in the face of inflation. When it comes to e-commerce, though, it feels like Walmart's going to be making a big move there. Talk to us about specifically what are the metrics, what are the street exactly looking for when it comes to Walmart?
Well, they're looking for comp sales ex-gas in the United States up about 5%, and they expect especially strong performance at Sam's Club, some 6.8%. Again, this value trade, this move to the essentials, this trade down perhaps. Yeah. But watch margins here. About 58% of their sales come from grocery now. And that's great to get people in the stores, but it's a particularly low margin business. So if Walmart sees some of the spending contract and things like appliances, that's not great for margins. Also watch its international business. The company wants to double profits there over the next 5 years. But the street is really bullish right now. The average price target is $164 a share. Last close, $149 a share. And really, there's no one who's saying sell Walmart at the moment.
Okay, Simone, thanks very much. Simone Foxman joining us there on retail. Let's think about the retail story in the US. Think about the likes of Walmart, but also the more luxury end. Burberry shares have been falling today after the company announced its earnings, and it certainly attributed some of the negativity to the US consumer, even if there were better signs coming out of China. Let's get to, from Bloomberg, let's get to our opinion columnist, Andrea Felstead, who joins us on set here in London. Andrea, your thoughts on the Walmart story there. First of all, let's go there before we go high end.
It's all going to be about the consumer. We'll be looking at whatever direction the US consumer is going in. We've had lots of snippets of evidence that it's weakening, but as Simone said, it's a winner in these more straitened times. So what the consumer says, and also how does Walmart benefit from that?
So Andrea, one of the pieces of Walmart's story simply that's targeting, at the end of the day, a lower end consumer, their everyday low prices. Let's go to the opposite end of the spectrum and talk about the luxury story specifically. Are you starting to see that kind of demographic divergence that we saw perhaps post-COVID, where the higher end consumer was able to weather the story better, or has that kind of normalized to some extent?
That is exactly what we are seeing. The message that's come through from the whole of the luxury reporting season, not just Burberry today, is that the super rich are still spending. It's the younger, more aspirational customer that is suffering. Last year, they had stimulus money. They had perhaps some crypto gains. They were spending those on luxury goods. And Burberry said today that those younger less wealthy customers are cutting back on things like sneakers, a big driver for the industry. It has been over the past couple of years, as well as hats and belts.
Some businesses, so there's this concern around the US, but some of these luxury names have really been doing well out of China, and we've seen that as such a theme over recent weeks with the reopening. What separated those that have done well and those that have not done as well? And Burberry, you know, even if it lived up to some expectations in China, it wasn't enough to offset the US disappointment. So what's the story?
That's right. What's happened over the past 3 years is the strong have got stronger. So LVMH with Louis Vuitton, Dior, Richemont's Cartier, Rolex. They've really, it's those big brands that are winning. Everybody else has not done quite as well. So if you're a brand like Burberry, you've really got to find a way to cut through that excitement about the big brands with the deepest pockets. Yes. They can take the best stores, get the most high-profile collaborators. Now, I'm more optimistic on Burberry than a lot of other people because they've got this new designer, Daniel Lee.
Yes.
And he did a really good job at Kering's Bottega Veneta. And there's an interesting little twist because the thing that's been coming through in luxury over the past few months is this idea of quiet luxury, a more understated elegance. And Bottega Veneta was one of the real beacons of that quiet luxury. So if he can do well at Burberry and create a buzz about the brand, you know, that will enable them to cut through the noise and maybe compete with some of those bigger names.
So they've got this new designer. They've also got a relatively new CEO. I mean, is that one of the areas of concern? I think one analyst today citing, you know, needing to know more about what the new team brings.
I think actually they've recruited a very good CEO, a British CEO who understands the brand. He understands the DNA and the heritage of the brand. His first strategic move was to make Burberry more British. And when you think about it, there are very few British luxury brands. So that's a great selling point, a great way to maybe appeal to Chinese consumers. So I think it's a good CEO, a strong management team, and they've got a good designer. The worry is there's an awful lot of expectation on that designer, a huge amount of pressure to come to, you know, to reinvigorate the handbag line, come up with it bags. If that doesn't work, it's going to be a big disappointment.
Andrea, final question on that Chinese consumer. Of course, overnight we did get that data that wasn't that strong, and we saw Alibaba earnings, of course, are going to come out shortly as well. Anna kind of alluded to it as well. The idea of a Chinese consumer, yes, it's predominant in the luxury space. Is it still that relevant from a global consumer perspective?
Yes, it is. You know, the Chinese consumer is still a big driver of spending, particularly in luxury. I think if there's any sign of that weakening, it's going to be quite worrying. Richemont said on Friday that they thought Chinese consumers were back, but they were still a bit cautious. There was still a bit of nervousness. So that will be the key thing to watch now, whether this initial splurge of spending sort of fizzles out.
Andrea, thank you very much for joining us. Bloomberg's Andrea Felsted with thoughts on Burberry and the luxury space. As we mentioned, we're keeping an eye on Walmart this morning. Coming up, a look at the other stocks to watch before the US Open. This is Bloomberg.
Let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting. and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside of that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. We want to take a look at some of the stocks we're watching in the pre-market. Anna, one of my favorites, a little fun fact about me, one of my very first beats at Bloomberg was the video game and the marijuana beat. And one of the stocks I used to cover was Take-Two. So TTWO for our radio audience is the ticker here. Shares skyrocketing in the pre-market, higher by about 11%. They're hinting at a release date for a new version of Grand Theft Auto. Anna, one of the really interesting things about video game stocks and companies is that it's really only as good as their next video game release. So an interesting little fun fact about me and the company itself, a little bit of optimism baked in the shares.
You see, and I thought the spirit of, well, I know now that the spirit of Matt Miller on this program does live on in the passion for video games. I don't know why I put him down as a player of Grand Theft Auto. I've completely made that up. I'm making assumptions, but maybe I'm right, maybe I'm not. Let's move on. If you're going to play a lot of games, you're going to need a lot of chips. And over in Japan, that brings in Micron. What's the story there?
Well, it's interesting. $1.5 billion of investment from Japan on these next generation chips. Look, it's important as we talk about President Biden specifically over in Hiroshima right now for the G7 summit. And one of the things they're talking about is these partnerships between these two countries, especially in the context of chips where Russia and China and that dependence on supply chains in Asia is really top of mind. Micron shares right now higher by about 2.4%. Crucial when we talk about Micron and their role as one of the predominant U.S. chip makers specifically. So crucial again when we're talking about President Biden's kind of efforts to bring a lot of that production stateside and really become a player in the global chip space. It looks like they've gotten Japan on board.
And we've talked a lot today about appetite for buying things. The US consumer certainly in focus with numbers all week from various retailers, from Walmart today. In terms of buying other things, Cisco orders slowing as customers weigh the economic outlook. I guess that's going to move that stock.
It is quite a bit. And look, Cisco is one of those kind of old guard tech stocks. It is actually down a little bit. We're talking a lot about the U.S. consumer, but business investment is crucial as well. It's not just about Main Street. It's about business investment. And that's really where Cisco gets a good chunk of their returns. Now, look, they did deliver some fairly strong results, but the orders flow is really slow. Their backlog really disseminating slowly. And that's really where the lag is baked into the stock, excuse me. So you are seeing those shares, CSCO is the ticker, down in the pre-market, Anna.
Okay, lots to watch when we get to the start of U.S. trading. Walmart numbers, of course, breaking shortly as well in the United States. Kriti will certainly focus in on that. Meanwhile, European stocks continue to respond to yesterday's enthusiasm on Wall Street. We're stronger across the European session. Stock 600 up by 0.6%. And actually, U.S. futures a little brighter than they were a few hours ago, up by 0.2% on E-minis and NASDAQ futures. That is it for Early Edition. Surveillance is ahead with Tom, John and Lisa. They'll be hearing from Ellen Zentner, chief U.S. economist at Morgan Stanley. Lots to talk about. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Daybreak Europe. Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open. This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Bears are unhappy. The Bulls are unhappy. Everybody's sort of universally unhappy.
Right now, folks are pricing that this is going to be a very tumultuous debt ceiling.
It feels like there needs to be another round of drama before they come to resolution.
We still look for the market to panic a bit more.
I would still put a hike in June or July at kind of the 30 to 40% range.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Do you remember trade war optimism? Remember that game?
Yeah.
Wasn't that fun?
No.
Debt ceiling optimism. Welcome. From New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures positive 0.2% on the S&P. We have some debt ceiling optimism, TK.
Yeah, that's a lead story, but I think it's more than that. I think it's more than just a debt ceiling. I'll go with you. You know, the president canceled the trip. He is in Japan. Amory Horton will be there. An important interview coming up in 15 minutes, John. But yeah, it's the debt ceiling optimism, but what else is going on? This is important. Our first guest this morning, folks, is an unconfirmed bull. I mean, it's percolating, John. There's people, Stevie Cohen, New York Mets. Mets are not optimistic, but there's...
I'm with you.
And Alicia Levine, I mean, there was the main... We opened the show. Everyone in Bramo is unhappy. That's the truth.
Data doesn't back that up right now.
No.
Data's pretty resilient.
Yeah.
Soc Gen's Kit Jukes, his words, nibbling away at those rate cuts that are being priced for the second half.
Yeah.
I'm calling this the bumpy road to absolutely nowhere. Tuesday, biggest one-day loss since May 4th. Wednesday, biggest one-day gain since May 5th. What does that tell you, Bramo?
Basically, bumpy road to nowhere. I'll just repeat what you just said. Basically, we've been range bound, and there's a little bump in perhaps further direction, and people are calling this a risk rally. Here's the issue, that tail risks are basically being taken off the table, potentially, maybe. And that, I think, is what people are looking for, a sense that the catastrophic possibilities aren't necessarily as present as they were perhaps a week ago.
Are rate cuts being taken off the table?
Slowly, not all at once.
Yeah.
Slowly, but not all at once.
It's interesting. You know, I really did a lot of fancy Bloomberg analysis today, John, and we have not broken out. It's, you know, is it going to be breakout Thursday? It was not breakout Wednesday. But it's just interesting to see. We're buttressed up against resistance and support, and it's like we're not there. SPX 4180. Excuse me, on Standard & Poor's 500.
On the economy, I think Enda Karen Reed Pickett did a great story yesterday on the Bloomberg Top. We'll cover that a little bit later this morning. Just pushing out the recession calls. Just pushing them out. Consumer still robust. Looking at housing data, activity still signs of life. Look at the rents in New York City. We'll talk about those numbers later too. They are awful. They're so punchy at the
Punchy.
Awful.
Translate
Which side
punchy.
is he on?
just not good. What do you think?
Ridiculous.
What do you think? You on the other side of this train?
Yeah, obviously, I own all the commercial real estate. No, I'm kidding. Yes, that's ridiculous to pay a median of $4,000 in New York City. That's where we're at.
And
tough
what
right
you
now.
do, folks, to do this correctly, we got to move the show forward. But 4,000 times 12 is 48,000, and there's your income you need to rent the unit.
Well, that's
and it's
post-tax.
like, are you kidding?
That's
post-tax.
post-tax.
Thank you.
Yeah.
And if you're single, particularly, and you add those 4 taxes together, it's like, okay,
Real money.
real money.
You
Yeah.
wonder why they're going to Florida.
Yeah.
Want to know more? From New York City, let's get to your price action. An expensive New York. Positive 0.2% on the S&P 500. Yields higher by a couple of basis points. On a 10-year Lisa, 358, just a lift over the last week. Monday, Tuesday, Wednesday, Thursday. Yields up every single day at the front end of this curve.
Honestly, to me, this is the question. How long can we continue with the sense that perhaps rate cuts being taken off the table and the optimism that we've been gleaning, I guess, from retail sales? I mean, the headline numbers haven't been that great. We get some further ones, but the gains in the stocks have been pretty resilient. Walmart is reporting earnings around 7 a.m. Ross Stores after the bell. Alibaba also before the open. Do they confirm the sense that consumers are still spending, perhaps not in home goods in particular, but in other areas not supporting earnings? Today, we've got a slew of data, including 8:30 a.m. U.S. jobless claims, 10 a.m. April existing home sales, and the Conference Board's leading index. Really curious to see if the initial jobless claims continue on that upward trend. And today, a host of FedSpeak. You get to do this all week. It includes Governor Philip Jefferson.
We're still speaking.
Fed Vice Chair for Supervision Mike Barr. That's going to be alongside FDIC Chair Martin Grunberg in front of Congress. And Dallas Fed President Lori Logan. Also, Janet Yellen is going to be speaking later as well as she talks with some of the bank executives to get a sense of the debt ceiling.
Chairman Powell tomorrow as well. The Fed Speak continues. The marathon of Fed Speak so far. We're so excited. Max Kettner, Chief Multi-Asset Strategist at HSBC, has been bullish this year. Max joins us now. Max, great to catch up with you, sir, as always. Max, you talked about that sweet spot that we're in, which keeps you bullish. Are we still in that sweet spot?
Yeah, good morning. I think we are. I think we're right in the middle of that sweet spot, actually. When we look at some of the data, right, you guys were just talking about the initial jobless claims, right? They've been on an upward trend. To be fair, it turns out that probably some of that data is probably wrong because of that, that data glitch we had in Massachusetts. But on the other hand, even if you believe that data, you could say, well, the non-farm payrolls are better than expected. The jobless claims are worse than expected. So you are in this sort of limbo where the data is not clear cut. For us, that is perfect. It's the perfect Goldilocks backdrop where it's a bit of food for thought for the bulls, a bit of food for thought for the bears. The rate cuts are not being priced out yet because we particularly see U.S. headline inflation go towards 3% in the next couple of months. So, you've got mixed data, but data on aggregate, beating expectations, but not too much. Inflation heading lower. What more do I want?
Max, a lad like you may not know the New York Metropolitans, but Steve Cohen is the owner of the Mets. He runs a small hedge fund shop in New York. He shares your optimism. He made that very clear yesterday. I think of the Cohen-Kettner nexus, and for you, it's based around how corporations adapt. How are corporations adapting right now that leads to your optimism?
Yeah, I think the AI theme in particular, right? If you look at Asia, for example, it's a pretty big theme and it probably will continue. Perhaps it may be a bit overbought and a bit extended in the short term, fine. But I think what we are seeing is, even aside from the AI and the whole structural transformation theme, in fact, when we look at the corporates, things are looking much, much better. The only thing where companies are actually responding less positively on is if they are asked about, during, for example, earnings calls, about the stuff they are not in touch directly. If they are asked, for example, about the general sort of top-down macro backdrop, then that sentiment towards that general macro backdrop, that's been deteriorating. We have seen that for quite a while already. However, when they're talking about their own earnings, their own sentiment, their own margins, right? The sentiment on the stuff that they are producing, the stuff they're doing on their own, that sentiment has actually been brightening up throughout the entire year already. It's been brightening up in the Q4 reporting season, and it's just continued now in the Q1 reporting season as well, that the sentiment on the stuff that they've got a handle on themselves, on their own stuff that they're producing, they actually feel quite positively about that.
People are throwing around this word risk on, risk off. Are big tech stocks risky assets, or are they defensives at this point?
Oh, that is a very good question. I think actually from a multi-asset perspective, from an asset allocation perspective, it is still a heavily frustrating environment actually, because I don't think it is a risk-on or a risk-off environment. We're still in an environment where it's everything on or everything off, right? At the end of the day, like, we've seen treasuries post gains, the duration post gains since the start of the year, equities post gain, credit, EM, right? So we've seen pretty broad-based gains, and in that regard, then I wouldn't call tech either defensive play or a risk-on game. I would play I would call it the play that is really the geared game on everything on, right? Because. And why is it everything on? It's pretty simple, because essentially we have priced these rate cuts in, right? Front-loaded these rate cuts. We've got data that is not falling off the cliff. We've got inflation heading lower. So it's all sort of everything is working. The big danger, I think, will come towards the second half of the year, where then perhaps inflation will re-accelerate. We see it re-accelerating above 4% by the end of the year. And then perhaps some of those rate cuts have to be pushed back again. And then the geared play of tech will work exactly the other way around, that it actually will be a geared play on the way down as well.
At that point, it could be an everything off kind of moment once again. Is this the new normal in terms of everything on, everything off, 60-40 not working, or is this just a temporary adjustment on the way to something more normalized?
I think if we're talking about the next couple of months until, let's say, the end of the year, I think that is the new normal. I don't see that change in the next sort of 2-3 months. In fact, I would actually genuinely hope, I would really, really wish I had that really bearish view that so many people are sharing right now. Because then you could have the classic sort of recession playbook. You could say, I want to have bull steepeners, the defensives, right? Telcos, utilities, the defensives, the bond proxies. Then the cycle ends, inflation is killed, we're going to start from scratch, happy days, right? That is the much easier scenario. The scenario that we've got, particularly from a macro perspective, from a growth, from an inflation perspective, is that it's going to be a much more painfully slow process the next year, year and a half. And that, from an asset allocation perspective as well, speaks for that sort of everything on and everything off, those locksteps being much more the new normal, at least in the next couple of months.
It's certainly a muddle through, that's for sure. Hey, Max, wonderful to get up to speed with you. Max Kettner there of HSBC. Stand bullish. The muddle through, the sweet spot for him to be constructive on this market. Your 2 years repriced over the last few days, back through 4% and now 4.16. Lisa thinking about 4.20 on a 2 year all over again going into Chairman Powell tomorrow.
But it isn't trading like a penny stock. So I guess that you can get that kind of sense that perhaps people are slowly adjusting to no rate cuts, but not necessarily this year at least. But it isn't necessarily a wholesale sudden move, which is the reason why people can kind of absorb it without some massive sell-off in some of the duration heavy assets.
I'm trying to triangulate over to some of the data on the Bloomberg that's less the obvious, like the 2-year yield, I think is the important benchmark. And one is the euro yen, John, weak yen, strong euro, and the euro's been weak, as you know, 110 down to almost a 107 print earlier this morning. And the answer is euro yen is not broken out weak yen. It is not broken out. And the other is a 3-month 10-year spread, which is maybe more of a pro spread, and it's bigger inversion, but again, it hasn't broken out. We're not there to the there of a breakout on this Thursday.
No, these are really subtle moves, but I'd pick up on a couple of things if you want to go multi-asset, cross-asset right now, Tom. Copper new lows for the year. That's something to look at in the commodity market. Disappointing data out of China, Europe, euro very close to a 107 handle right now on euro dollar.
108 something, right down there. And yen, as I look for renminbi, rather, as I look for John for this morning for the first time, 7.03, and that's with convexity. That's moving. That's accelerating. Weaker renminbi, a la the copper trade.
You've got all these rate cuts priced for the second half. Got a lot of people short the US dollar. This is what Kit Dukes of SocGen is talking about this morning. And the data kind of shifting the other way, Tom. And just slowly taking a bite out of those positions. Just slowly, not all at once.
I mean, folks, it's really deceptive now. It's boring. It's a snooze fest. It's not surveillance snooze fest right now. There's a lot
Not at all.
going on.
Do you want another number that starts with a 4? We talked about it briefly. This from appraiser Miller Samuel. New York City apartment rents. The median rent in Manhattan, $4,241. 8.1% higher than a year ago. Still climbing.
4241?
Yeah, still climbing. From New York City, equity futures on the S&P 500, just about positive.
Keeping you up to date with news from around the world with The First Word, I'm Lisa Mateo.
President Biden and other group of 7 leaders have begun arriving in Japan for their summit. China and Russia will be the problem at the top of their agenda starting Friday. Russian President Vladimir Putin continues his war in Ukraine, and a post-pandemic China is busily expanding its economic and strategic clout. Meanwhile, China's President Xi Jinping is holding his own summit. The 2-day China Central Asia Summit will assemble the leaders of Kazakhstan, Kyrgyzstan, Tajikistan, Turkmenistan, and Uzbekistan. It's Xi's way of reminding the G7 of China's influence outside the U.S.-led world order. Hungary will block further European Union aid to Ukraine. That's because of what the Hungarian foreign minister calls an increasingly belligerent attitude on the part of the Ukraine toward Hungary. One of the complaints is that Ukraine singled out Hungary's largest bank for doing business in Russia. There's growing speculation that Ron DeSantis is about to announce that he's challenging Donald Trump for the Republican presidential nomination. The Florida governor is summoning financial backers for a meeting in Miami next week. While they're there, the donors expect to make fundraising calls on behalf of DeSantis. And Deutsche Bank will pay $75 million to settle a lawsuit in the U.S. involving the late disgraced financier Jeffrey Epstein. Victims of Epstein's sexual abuse accuse the German bank of facilitating his sex trafficking operation. J.P. Morgan faces a similar suit. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I'm confident that we'll get the agreement on the budget, that America will not default. And every leader in the room understands the consequences if we fail to pay our bills. And it would be catastrophic for the American economy.
I'm optimistic of our ability to work together. Do we have obstacles? Yes, we have a big obstacle in the White House. If there's one thing you know from me, I never give up. I have the grit, the perseverance, and we're going to get it done.
President Biden, Speaker McCarthy, all on the same script yesterday, Tom.
Oh, they were. They were
you know, constructive. We're not going to default. We'll get it done. The problem's in the White House, just so everybody knows, according to Kevin McCarthy. House Speaker TK, you clear on that?
Yeah, can I just have a moment of silence for our Capitol Hill team? You know, they've got to deal with this seriously day after day after day, and God love them. They got the patience to do this. You know, I don't know what happened. What happens today? Nothing because the president's in Japan, right?
Mood music plays well in the media.
Yeah.
They like playing little snippets like that, but ultimately, have we moved on substance? No indication of that just yet. It's nice they're playing nice. I think that's good. That's good.
Right.
But ultimately, no indication there's going to be a deal anytime soon, apart from them saying there might be.
There will be symbolism on Friday. The last of our World War II presidents will visit an emotional point for Americans and for all of us in Hiroshima, Japan. Anne-Marie Horton, our Bloomberg Washington correspondent, joins us now at the beginning of this trip. She is at Hiroshima. Anne-Marie, good morning to you in the 6 o'clock evening of Japan. What is the president's schedule as he rests for a busy Friday morning?
Well, the president landed and immediately got to work. He had a bilateral meeting with the Prime Minister of Japan, Fumio Kishida, who, of course, this is his hometown. And when you talk about this historical significance, it is the Japanese that really want to make sure that nuclear nonproliferation is also on top of the agenda, because looming large over this meeting, of course, for the president personally, is going to have one foot here in Japan, but really another foot in Washington, D.C., cutting his trip short to make sure he can get back for the debt ceiling negotiations. But also, of course, it's going to be heavily focused on China, as well as, of course, on Russia's invasion of Ukraine.
Is this a new leader for Japan that is a continuation of the LDP leaders we've seen for so many years? Or does he meet a new politically vigorous Japan?
Well, this is a leader that has, I believe, out of all of these leaders meeting at the G7, the highest when it comes to polling numbers, something that I think President Biden would be very envious of as he's sitting down with him. This is someone who also you've seen recently good growth numbers out of Japan, numbers in terms of their stock market is doing well, the best since the 1990s. And on top of that, this morning, what we've learned from the Prime Minister when he was sitting down with chip CEOs, and one of them, of course, being Micron, a huge U.S. company, and they're now doing a deal to have a factory right here in Hiroshima, and there's going to be some incentives for them to come here to Japan, but this is all part of what the United States is trying to do to make sure they could shore up supply chains outside of China.
It's pretty interesting to think about the split screen right now with the G7 leaders meeting, and then the China Central Asia Summit taking place at the same time, with China meeting with Kazakhstan, Kyrgyzstan, Tajikistan, Turkmenistan, Uzbekistan at the very same time. Is this precedented? Do we have a sense of some sort of gathering where China tries to basically show its sway with the world at the same time that G7 talks about how to deal with the threats that have emerged from that nation?
Well, I think what you see is Xi Jinping trying to shore up other countries while Biden and other world leaders are looking to really the global south to make sure they can keep them on board, not just because of the struggles they have in terms of what is going on with higher inflation, energy costs, when it comes to agricultural costs because of Russia's invasion of Ukraine, but also wanting to make sure they're looking to democracies, not autocracies, when they need help. What you see here also, I think, interesting is not just this split screen that probably matters to the White House, but also matters to Moscow. These are former ex-Soviet states, and Vladimir Putin is not there, but they're meeting with these Central Asian countries. That is critically important for Xi Jinping to want to make sure he has good trade ties and also influence in these capitals.
And Marie, there's also an issue right now of what happens when President Biden goes back to the U.S. and skips a number of steps in his trip. Does this change the U.S.'s presence there, that the focus is squarely on domestic issues and not so much on some of the international concerns that all of the members share?
Well, there's a tremendous amount of angst at the G7 finance ministers meeting in Niigata, where I sat down with Treasury Secretary Yellen. This is what she was focused on, because this was looming large over her and Fed Chair Jay Powell, who was there, because when you talk to other finance ministers on the sidelines, they were concerned about the economic risks emanating from Washington, D.C., even though they were there to talk about other matters, most notably China. So this is certainly something that is going to weigh on the president. He doesn't expect a deal by the time he gets home. But of course, he had to cut his trip short. He was making this huge trip as well to Papua New Guinea. The White House was touting this as the first U.S. president to set foot in Papua New Guinea. We do know that Xi Jinping met the Prime Minister of Papua New Guinea in November, Earlier that year, he sent his top diplomat to Papua New Guinea. Potentially, people were talking about maybe Beijing was going to try to go for security alliance, the way you saw China do with the Solomon Islands. And then he was going to meet the Quad in Australia. And all of that has been has been scrapped. So the criticism will be that domestic policy potentially, at least this the critics will say, is undermining foreign policy as the U.S., especially now, is trying to shore up alliances as they look to counter Beijing.
You know what this G7 needs, Tom? Analysis of Real Madrid and Manchester City. That's what this G7 needs.
They do.
A little bit later.
Yeah, they do.
AMH, thank you.
Prime
Anne-Marie,
Minister
over in Japan at the G7.
provide a brief on
Prime
that.
Minister's probably got things to say. You just tweeted an amazing stat from Opta. It took until the 25th minute for Real Madrid to complete a pass in Manchester City's half last night after getting absolutely crushed 4-0.
For Americans not up to speed on the wisdom of John Farrow, this was the most extraordinary match I've ever seen. We've seen this in college where one team dominates, but I've never seen a professional game where one team was almost exhausted by dominating for minute after minute after minute after minute.
Not at that level. Not at a team, not by a team, I think, as elite as Real Madrid. I haven't seen a 25 minutes like that. I just sat there almost in awe of it.
Yeah.
Man City were just there, just full press.
Inform
Real
us
Madrid
about
sitting
this
so
coach.
deep and couldn't get out of their own half.
The coach put this together, right?
Pep Guardiola's got a big role to play. They've assembled a fantastic team, but money only gets you so far.
Exactly.
You've got to get them to play with each other. And he seems to have done that in a beautiful way. The other thing I would say as well is that team seems to be peaking at just the right time.
Yeah.
To get your team, your side to peak going into towards the end of the season is pretty special. He seems to have achieved that.
Asking for a friend, is he available for the Tots? They seem to have an
No,
open.
I don't think you have the budget for that kind of coach, because he's going to want to spend a lot of money to sort out that team.
It's amazing, and what's so cool about it is they've got the superstar guy, the guy 6'7", the blonde. Haaland. And he's like, his strength is he's not consequential because the others are so good. And then all of a sudden, boom, he's
You've got all
there.
these kind of match-offs, Tom, all around the pitch. So let's pick out one. Carl Walker, Vidi Jr. Walker wins that easy. Grealish down the left side. Grealish won that easy yesterday.
Yeah, I'm a big fan of him.
It's super, super impressive what they achieved.
So what do they do next?
Good luck to them in the final. They'll be the overwhelming favourites against Inter in Istanbul.
Oh, I thought it was AC Milan.
No, it's
Inter
not.
Milan.
You're just taking
Inter
digs
Milan.
at
In Istanbul.
my beloved
Really?
AC Milan.
Seriously?
I wouldn't like to see my AC Milan go against that Man City side at the moment. That's for sure. That could be
Or the
ugly.
Tots, for that matter.
Yeah, I agree with you. I agree.
It was just great. I enjoyed it immensely, and thank you to CBS for covering it.
They've done a great job, you know. They've done a really, really, really good job.
It's better than some of the other stuff that we have to see.
We won't talk about that. Okay. We will talk about this a little bit later this morning. We'll get earnings from Walmart. Look out for that. Should drop in about 35 minutes' time. Bramo's still with us.
Yeah.
She wants to talk about the Fed speak, TK. She's excited for that. Chairman Powell tomorrow. Tons of Fed speak through this morning. With the bond market that's repricing off the back of pretty decent data. So the next stop for the data story is going to be jobless claims in about 2 hours from now. And Lisa, claims over the last few weeks kind of climbing higher, breaking out. Still low historically, but breaking out.
Giving a sense that perhaps they are going in the right direction, but not as quickly as people thought. The issue that people are struggling with is no one data point is screaming conviction on either side. So you continue with this sort of range of potential both sides risks that we just keep seeing.
4-week moving average claims, 2 standard deviations, 254,000. That's my statistic.
Just slowly it's happening. You can see
slowly
it.
happening. We're not there yet.
I agree. Equity markets right now positive by 0.2% on the S&P 500, a lift in the equity market. The data so far this week pushing back just a little bit against some of the gloom. We get more data a little bit later this morning. Jobless claims coming up shortly.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple of people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Live from New York City, welcome to the program on TV and radio. This is Bloomberg Surveillance, and here's some of the price action for you. Equity markets on the S&P 500 positive by close to 0.2% on the S&P. On the Nasdaq up by 0.2% as well. Yesterday, the biggest one-day gain on the S&P since May 5th, which followed the biggest one-day loss since May 4th. We're calling this the bumpy road to absolutely nowhere, and that bumpy road to nowhere continues. Let's see if we can break out of this range on the S&P 500. In the bond market, repricing yields higher Monday, Tuesday, Wednesday, doing it again Thursday morning on a 2-year, 416.28, just getting close to the 420. The data coming in the US's favor, pushing out the recession calls, taking a nibble, to borrow the phrase from Kit Dukes of SocGen, out of the rate cuts price for the second half, supported by a lineup of Federal Reserve speakers this week who are determined to stay the course, Tom.
Stay the course and drift away from the rate cut discussion as well. It's very flexible right now, as we heard from Max Kettner of HSBC here earlier in his optimism. Right now on American Economics at Barclays, Pooja Sriram joins us for a brief. What has changed, Pooja? I'm fascinated, not about a look back to Q1, but like where we are right now. Are we above a 2% real GDP guess for the second quarter?
Well, thanks for having me on the show, Tom. Not about 2% GDP. Our base case is, we're still likely to slow from Q1. We do track GDP on a data-to-data basis. But to your point, we are starting to see some upside. Of course, we're very early on in the quarter in terms of the data that we have. But, we got retail sales this week. We got industrial production, all pretty sprightly prints considering, where we thought we would be. So definitely more momentum in the U.S. economy than we had expected going into the second quarter.
And then overlay inflation on that. Let's call it a stubborn inflation. Was that the word, John, for the Fed speak? Like, was it 2 days ago? Stubborn was mentioned 14 times.
I think someone might have used that word, yeah.
14 times, I believe. They said stubborn. When you have a stubborn inflation and your optimism on GDP, do you get a nominal GDP that's still sprightly? Like, to me, the lead here is nominal GDP hasn't come in, has it?
No, not yet. But to your point, I think we are expecting that we should see some progress on inflation in the coming months. The bump that we had in March and April from goods prices, we don't expect that to sustain. We are seeing some pretty good news in the housing sector already. It's, of course, we need to wait and see if that continues. And then, of course, we've had, a little bit of good news in terms of rent or, rent inflation. That seems to have stepped down from where it was. So, although activity has been holding strong, I think we are getting some pockets of good news as far as inflation data is concerned. And I think that's something that we would be watching quite closely going forward.
Pooja, if we take all the tail risks off the table, let's say we don't get some sort of banking crisis and the worst of it's behind us, and that, yes, there's a slow grind, but nothing catastrophic. We don't get a debt ceiling default or debacle or whatever you want to call it, and then all of a sudden, are we looking at a soft landing?
Well, that's I think, a plausible path to get there. There are risks. And I think one of the risks is, activity continues at this pace that is, not enough progress for the Fed. And if activity is continuing at this pace, let's say inflation also doesn't come down as much as, they expected it to, that's the tricky situation. But, as you said, if everything pans out, where, it's what we call a slow grind lower in terms of inflation, there's a little bit of labor market softening, then it's quite possible that we do get that soft landing that the FOMC is aiming for. But, risks on either sides for sure.
Does a soft landing like that necessitate inflation to remain higher for longer, or does it just mean it's going to take a little bit longer for inflation to come down, and then everything will go back and be fine, just without sort of the massive swings in the economic condition that a lot of people are prepared for?
I think in terms of how that soft landing would look, you would definitely need a lot of softening in the labor market conditions. So you will need to see labor demand come off. You will need to see wages starting to decelerate. And in that world, one could think of a situation where, inflation is around the 3% handle. Let's say core CPI is around the 3% handle, and then they wait and watch to see how that sort of works its way lower.
Let's go through the Fed speak for the day ahead. If you're just tuning in, welcome to the program. This is Bloomberg Surveillance. A little bit later on today, we're going to hear from the Fed Governor, Jefferson. You're going to hear from Barr, Vice Chair for Supervision at the Federal Reserve. You'll hear from Logan too. Tomorrow, a big day. You'll hear from Bowman. You'll also hear from Williams. You'll hear from Chairman Powell as well. There's this big conversation about jobless claims in the mix at the moment, breaking out recently. Claims at the moment sitting at 250, 264. The survey today is 252. This is what Mike Gapen of Bank of America said recently on this, Tom. The recent rise in initial jobless claims was likely due to a spike in claims in Massachusetts that was not reflective of individuals. Now, these guys are really digging into the data.
They're digging into it, yeah, weekly data.
Mike and the team are basically saying, excluding Massachusetts, initial claims have moved sideways and continue to point to limited layoffs. So how much signal is in claims right now?
The answers we don't know, but in their defense, every week it's either California or it's North Dakota, or in this case it's Massachusetts. It's always lumpy. I've always gone to the 4-week moving average, and John, that moving average, it was, as early as February of this year, it was under 200,000, and it's come up sprightly, and my tension point, as I mentioned earlier, is a 254,000 4-week moving average, somewhat of a pseudo monthly statistic.
Pooja, I just wanted to bring you into the conversation for a final word on that. What is your read on what's happening with jobless claims at the moment? Is there some signal there or not?
There is some signal from that, but to your point, we found something similar when we looked at last week's claims, and a lot of that did come from 2 states, California and Massachusetts, and the read on Massachusetts wasn't entirely clear. So, we weren't ready to take too much signal from that. But to your point, claims have been crawling higher, perhaps, not at a pace that one would have expected it to. And today's data would be interesting to watch. In fact, the data that we get today would be for the payroll survey week, so it includes the 12th of the month. So it would carry a fair bit of signal as to what's happening on the labor market. Our expectation is for a print of 250,000. So not very high compared to, say, where we were a month ago, but definitely moving in the right direction.
Pooja, great to catch up. Pooja Sriram of Barclays on the latest data in America a little bit later this morning. 8:30 Eastern Time, TK. Jobless claims coming out a little bit later this morning.
Massachusetts has been cleared out. I don't think you're going to hear much from Massachusetts in this claims. Last week, I'm told from a good source, it was a middle relief clear out of the Boston Red Sox.
Right.
They were all down getting the claims in. It was like, last place, let's go. Let's move 5 guys out.